What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, everybody. Welcome back to another live stream. Thank you for being here on another crazy day in markets. We have a lot to unpack. Yesterday, we had big tech earnings that largely the market is celebrating. Go figure, the market is higher today. It has been a monster upward trend that we have seen in the last few weeks. What's up, Alan? Good to see you, Joey. Yoshi in the chat. We got lots of people here. Thank you for being here. Jeremy, thanks for being here. Good morning, good afternoon, wherever you are in the world. Thanks for being here. Okay, so we got a lot of stuff to talk about because at the same time, you've also got some interesting developments on the old JPY, Japanese yen, strengthened against almost, well, pretty much everything, right? Look at the dollar yen here today, shot straight lower. Euro yen, pound yen, CAD yen, Aussie yen, Kiwi yen. And I need you guys' help on this because I put together a little bit of a poll. What do you guys think? Bullish or bearish yen pairs? Now, I need to clarify here so that we make sure that we're voting correctly. First of all, if you want to cast a vote, you have to just put the number 1 or 2. If you put anything else in if your text response is anything other than just the number 1 or just the number 2, it will not count properly towards the system. Okay, so yen pairs, meaning are you buying the dip in things like Swiss yen, CAD yen, pound yen, euro yen? If you're a currency trader, of course, I know there's not everybody's a currency trader. Dollar yen, etc. Are you more inclined to be buying that dip, or would that be something that you're like, nope, that is more serious business? We're going to see a larger topple over. There is a good case to be made for both sides of this. Let me explain. If we look at dollar yen, the last time it was floating up in these 158 to 160 ranges, we did see yen intervention, let's call it, take place and really start to push things lower. Watching the Japanese yen has been one of the more interesting stories over the last few years, as it's been in decline dramatically, and yet there's kind of rising yields in Japan, issuing the idea that maybe the BOJ will start to hike rates. But it seems like you guys are generally more leaned into the idea of buying the dip. We've got 74% of respondents from you guys here voting in favor of more of a bullish yen pair setup, meaning you'd be looking at something like euro yen with a bullish bias, pound yen with a bullish bias. I think I'm in that camp too with you guys, the 75% of you, simply because we are in a risk-on market. And so the yen is sort of like the VIX in the sense that it seems to get shorted every time it gets a little bit of something going. I know this can be confusing for the non-currency traders or the new currency traders out there. But when I say shorting the yen, right, I'm talking about, the yen itself is up today. It's just that we're looking at like dollar versus yen, euro versus yen. Yen is winning, so those other currencies are moving lower, right? So currencies, you always have to be considerate that it's one versus the other. Does this put any pressure on equities? Well, the yen, even over in Japan, doesn't seem to be holding down the Nikkei very much today. The Nasdaq is kind of rallying up anyways. Little bit of firm tone in nature from the BOJ. And we also know we were already sitting at that level that they don't like, that 160 mark that we talked about yesterday during the stream. However, to be completely transparent, yesterday, Chris and I were talking about, is there a possibility that you get the blowout breakout here at 160? Which, by the way, I still think can happen. I think my friend Kathy Lean in the industry, some of you guys might know Kathy. She is a phenomenal macro. Her Instagram handle is Forex Macro Queen, and she is the macro queen. But she was talking about this a long time ago. I remember watching, pointing out that most of the time these are V-shaped moves because the market kind of initially sells, but then people kind of doubt the BOJ, right? They're like, no, you're not going to do it. You're not going to do it, right? Eventually they will. Eventually there will be some larger yen strength that comes into the picture. But the market has rewarded you over the years recently for stepping in and shorting yen strength. Now you're fighting a giant, because if the yen decides to really run, you could be in a world of pain. A couple other markets that I'm watching here today. Oil. I'm considering taking a little bit of a stab on the long side of oil. We've got really nice momentum forming here. We still have, from a geopolitical standpoint, it is not all clear in the Middle East. I'm not necessarily trying to make the prediction per se that I think everything is going to fall apart over there, but I have several long stock positions. I like the idea of being long oil because it gives me a bit of a hedge, in the sense that if something were to dramatically worsen, oil price skyrockets, I could ride that momentum. And I also just generally like charts that look like this. This is a clean, like, if you didn't show me the news, if you didn't show me everything else, if you just showed me this chart, I'd say I really like that chart. That's the type of chart I trade longside, right? I like charts that are looking like this, where there's a clear bid on this chart. I typically, I prefer to trade the charts that have the cleanest momentum. One thing that is showing momentum to the downside that I would look skeptically today at is gold. We talked about yesterday. Gold has not been able to maintain or hold any of its gains. I don't think I'm willing to short gold. Let me just check my asset scorecard here. Let me go gold here. So if I look at gold, we have, a neutral reading on gold. So I don't have enough of a conviction here to really go short gold. But the technicals in this case, this would be more of like a technical short in my view, right? Really simple kind of downward structure. We're retesting this major critical level. This would be more of a prove it moment for the bulls, meaning, bulls, are you going to be, or I should say, well, either way, right? This is a decision point for the bears and the bulls, right? We're looking at this and we're saying, okay, previously we broke through, sellers took control. We're now back and testing that area. Could that be a spot where sellers continue their push? So I would lean on the commodity side of things. I think gold shorts, oil longs kind of look okay. Now, again, I'm not interested in shorting gold. Am I interested in going long oil? The answer actually is yes. I like the long oil setup. I've got confirmation from my system. And if I'm dead wrong, I'll take a small loss, right? That's the thing that we have to remember here is this is a trade. This is not I think oil's going to $200 a barrel in the next 3 years, right? That's not what I'm trying to do here. There's a different time and a place for that. I do some of that stuff too, but yeah, I'm watching oil. I like it. I think that, if we can pull back a little bit further, if we get a little bit squeezed to the downside, there may be an opportunity where I could see getting long oil with the tight stop and see if I can catch another leg higher on this. Just following macro trends here. Maybe what we could also do is just check something. Geopolitical risk tracker for fun here is sitting at 75, remains elevated. And is this updating properly? Let me check. Yes, it is. We do have the April 30th score at 75. Not too shabby. So what this does, by the way, it checks a bunch of headlines. It reads a bunch of uses AI to read a bunch of headlines. And we still have elevated geopolitical risk. And so I feel that this is a very appropriate hedge in my own trading. Let me explain. So I have a whole bunch of long stock positions. I also think personally that the stock market is stretched. But do I want to short the stock market? Absolutely not. Those earnings were phenomenal yesterday. Like Amazon. Now I got messed up by Meta. That's the only one, right? Amazon up 3.7% today. That looks great. Problem is Meta is getting slapped down minus 8.5%. Of course, I'm long both of those. So one is hurting me more than the other. Amazon is my biggest position. Meta is just about the same size. But I look at this scenario and I say, okay, well, I have a lot of long stock positions. I'm seeing technical momentum to the upside on oil. I wouldn't be surprised if this is sort of a, drag it out to the weekly chart. Could we be seeing kind of this next part of this move? I don't know. I'm not certain that we're seeing that. I'm not making the prediction per se that I think, XYZ is going to go down in the Middle East. But I look at the scenario and I say the risk reward is relatively attractive, in my view. So I'm looking at oil. We'll see if I take a trade there. Gold, I do have a GDX short put position that is not in the money at this time, but if price keeps going lower, then I will buy some GDX via short put position. Bitcoin, congrats to Marco. He caught this entry. I was looking for it too. During live stream yesterday when the stuff was going down, I was talking about with Jerome Powell's last speech yesterday, which I'll ask you guys to do another poll on that in just a second. Actually, I'll throw this up while I talk about this. What'd you guys think? What did you think? Let me see. I'm going to stop our previous poll. I'm going to start our new poll. Help me out. What did you think about Powell? As a reminder, your vote will only get counted on this poll if you give me a strictly the number 1, strictly the number 2, or strictly the number 3 in the chat. If you put anything else in your message, it will not count towards your vote. How do you think Jerome Powell did as Fed chair? Yesterday was his last meeting, press conference. He will be stepping back into the role of a Fed governor. Some people claim that he's going to play the role of a shadow chair, Fed chair, while Kevin Warsh gets started until the investigations in him are completely, truly behind him. That's kind of his own words. He kind of basically said in his own discretion, he will leave the Fed or leave the role when he believes that the investigations on him are done. So we'll see. But what do you guys think? 1, 2, or 3? A lot of people saying he did great. A lot of people saying he did okay. But anyways, while the press conference was happening yesterday, I was looking at Bitcoin. I think that Bitcoin, it's a real slow turnaround, but Bitcoin seems to be trying to make a larger scale recovery type move. I think that Chris and I were talking about a move back up into like the 90,000 range, or perhaps even like the 100,000 range. I think it's very possible for Bitcoin. You've got some momentum. Risk assets seem to be catching a little bit of a bid. If you take a look at, price momentum here, we've gone from this down leg into what seems to be a really gradual type of upward trend trying to take place here. If we take a look at some moving averages, we still do have some heavy resistance overhead in the form of the 200-day moving average. But we've broken above the 20, the 50, and the 100-day moving average. So Bitcoin is trying to turn the ship here. And I do think that if you catch some stronger, moves higher, the recovery, if it does start to, if risk assets are really going to keep going here, this level was one that I had marked up yesterday and was looking at for a possible, kind of defined risk, upward trend, question mark type of move. So I'm still looking at that. I like Bitcoin to the upside, oil to the upside, gold neutral to the downside in the short term. Long term, I like the idea of adding a little gold to my portfolio. Yields today, a little bit lower. Is that in tandem with BOJ going higher? So we have Japanese 10-year yield moving higher. So a little bit of drama on that side. Just take a look at that Nasdaq, by the way, guys. That Nasdaq is unbelievably strong. Let's just final results on the poll. Nobody said he did poorly. Wow. Not too shabby, huh? Someone's gonna vote poorly just because we saw that. Anyways, the poll response. So I mean, yeah, I think consensus, generally speaking, around Powell was that he was a decently good Fed chair, especially given the environment that we threw at him, man. Like, I mean, every Fed chair is going to go through hard times, and every Fed chair is going to get absolutely dogged on by people all the time because he has or she has like the most difficult job is to try and like predict the future. Imagine if like every prediction you had about what was going to happen in markets was broadcasted to the whole world in front of a press conference. Like, that's why Fed chairs generally try to shy away from prediction. Now, what will be very interesting, guys, is that it seems like Kevin Warsh is more interested in predictions. There's a school of thought, and it is basically this. Let's say that this is now, right? The current Fed chair, Powell, is kind of, or the standing for now, they're more data dependent, okay? Which is data dependent means you wait for the jobs data to come in. Granted, like Edgefinder is more data dependent, right? It looks at, well, actually it does a little bit of combination of both, but it's looking at the data that we have now to try and make a decision as to what could be coming next. But mostly it's waiting for data to come in to materially prove a narrative or a thought process. The new Fed chair is interested in kind of like forward looking, in the sense that, I know that sounds objectively better, but it's not. I'll explain. When you're data dependent, you lag what's happening, but you wait for finality in the data to make decisions. There's pros and cons there. When you're forward looking, you don't wait for finality. You see things changing and you make a prediction. And that prediction could be right, and you could be ahead of bad things happening. Like, for example, the jobs market getting weak or inflation getting out of control. Like, if you're ahead of things and you make the right prediction, you could theoretically right the ship before it gets ugly. That's the narrative of the Warsh kind of side of things. Powell is more, the criticism of the White House has been too late Powell, because he's kind of waiting for data to materialize and then making decisions. Which way is right? Which way is wrong? Well, this is a slow moving average, and this is a fast moving average in technical analysis land, right? So we have fast and slow moving averages. Let me ask you, which one is better, a slow moving average or a fast moving average? It's a trick question. The answer is, in my opinion, there's not a right and wrong here. There's a pros and cons. A slow moving average is going to be less whipped out of ideas, but it's going to lag some of the moves. A fast moving average is going to adjust very quickly to new moves, but it also is subject to getting whipped out and making wrong calls. This is kind of the narrative right now. This is the debate kind of in the economics world. Which way should the Fed be? Anyways, guys, we're going to bring in Chris Pulver here to the conversation. I'm curious what you guys think about that in the chat. Which one is more important? We have unemployment claims here this morning. Did we get anything of interest? Let's just take a quick look as we jump over here to the charts. Unemployment claims.
Hey, good morning.
Good morning. Okay, so we had just checking the unemployment claims and PCE number. Okay, so advanced GDP came in light. Wow, there actually was a lot today. Sorry, guys. I got caught up in my storytelling about the Fed. Advanced GDP, softer than expected. Unemployment claims, better than expected. My goodness, 189 versus 213. That's a pretty monstrous beat on unemployment claims. Advanced GDP price index came in lower than expected. That's good for inflation. Advanced GDP, lighter, worse than expected. Employment cost index, higher than expected, not so great for inflation. Core PCE month over month came in line with expectations. If someone has it in the chat, can you give me the Forex Factory? I don't know why they don't do this, but if you could give me the PCE year over year number, that
You
would
want the headline or core?
actually both.
Both.
If you have it.
So core PCE year over year was previous at 3%, forecast at 3.2, came in 3.2.
Okay.
So at expectations, but higher than previous. Headline PCE was 2.8 previous, forecast at 3.5, came in 3.5.
Okay.
So
yeah,
miraculously right on expectations, but definitely higher than previous.
Okay. So basically, kind of a mixed report here. GDP a little soft, so growth a little bit soft, but jobs data just slightly better than I would say better than expected today on the unemployment claim side of things. So a little bit of a mixed bag. Just going to take a look also here. Stocks are slightly lower. I mean, Chris, that number or those results yesterday for big tech earnings. What are your thoughts on that? I mean, crazy that this market just does not seem to want to be beat. And I kind of took that away from Powell's commentary yesterday. He was kind of like taking his trophy in the sense that like he was kind of claiming the stats on his administration in the sense that like we kept inflation relatively under control. Employment is still relatively strong. Like he was kind of taking his victory lap towards the end there, and also pointing out that the U.S. growth, the economy has remained resilient for years, and it's just it's a tough thing to bet against.
It for sure is, and I mean, piggybacking FOMC and some of the biggest earnings certainly doesn't help to have or hurt to have four beats on your top 10 stocks. Interestingly enough, mags wise, so Apple has earnings today. It's up a little bit. Amazon beat top and bottom. It's up about $8 pre-market. Google up to fresh all-time highs by a decent clip, $26 higher than the close right now pre-market. Meta is down a decent amount. They were expecting about a $60 to $70 move, and they are down about $60 right now. Microsoft was expecting Microsoft's actually pretty doable. It was like I think an 8% move, and it's within like $5. So I mean they all beat. I mean, I took a screenshot yesterday. Let me see what that was. I think that maybe the market was looking at this as like it was priced to perfection, as far as like the market was going to be hard to impress, if you will. Here we go. So hyperscalers numbers were extraordinary. The stocks were not. So Meta fell, Microsoft's holding on, but down a little bit. Amazon's up to fresh highs. Google's up to fresh highs. We're looking at Amazon for AWS, just a cash machine. Microsoft with Azure doing fine. Google Cloud hit the headline here says escape velocity. The cleanest beat of the night with the cloud growing 63% and search re-accelerating. I mean, then even Zuckerberg, even though it's down, it's like Meta beat revenue, 41% operating margin, even though their costs are jumping up 35%. So yeah. I mean, it's again hard to beat like crazy large numbers like this with $3, $4, $5 trillion companies now that NVIDIA's at fresh highs, but they are still beating, and yes, they are still spending. I just think that this is the normal. Like it's going to be the arms race. I think you and I talked about this yesterday. It's like AI matters so much, which like I think this is the narrative the market is clinging on to because we still have optimism in the IPOs that are coming this summer. The AI narrative, the semiconductor space, like this build out I think is happening whether the world wants it or not. I just think when the dust settles, I'm sure there's going to be some casualties along the way. But nevertheless, if we can be driven to new highs by these Mag 7 stocks, or these top 10 stocks, I don't think anybody's going to be complaining. The problem is if they start to roll over, they're so large, they will drag the other 497 or 493 to 490 with them. So we need to see the participation of Mag 7. We said that with this dispersion trade. We need to see them at least participate to the upside for the markets to go to fresh all-time highs.
Yeah, and if I can show my screen, I just want to show off this earnings report summary tool that we built. Chris, I don't listen to all the earnings calls. I don't know if you do or not, but I'll listen.
I summarize them.
Yeah. So anyways, we built a tool that essentially after each report, we'll go ahead and generate a summary of what was said in the earnings call, et cetera. It runs at 7 p.m. Eastern time each night. That's the way the script is run or set up so that it can give you a kind of summary post earnings call. Anyways, it also gives you a report card grade. So A+ for Alphabet, of course, Google with guidance being taken away. Google Cloud revenue grew 63%. And this is what they're all talking about, right? They're all talking about their AI related revenue. The stock moved up after hours. Year to date, it's up 12%, with sales reaching 20 billion versus the 18.4 billion analyst projections. That's an 8.7% beat on Google Cloud revenue. Company announced a 5% dividend boost. Management messaging emphasizes continued investment in AI, scaling cloud operations, and defending the core advertising business. Forward guidance summary, strong and raising. So that's just one of them, right? So all of them pretty much got good reports. If we go look at Amazon, if we take a look here, we got an A on Amazon. And, you know, granted, Chris, I guess the question is, we almost all expected big beats from these companies. Like they're just such Goliaths or such beasts. The question is like the share price reaction. Was it concerning in any way? And I would say, you know, kind of mixed to not really. It wasn't like a big, you know, I mean, Google obviously moved higher after the print. What's it up today? Now 7%. So you're getting a good positive response. So that tells me maybe the market's not like tippity top right here, right now.
Right.
So yeah, we'll continue to watch. But I feel like even if you're not a stock person in the audience, like you want to pay attention to these because this is, as we've talked about many times on the channel here recently, this is the driver of like stimulus and growth in the US economy. It's a big chunk of what's going on. And so, as you pointed out, having 4 of the top 10 kind of companies report with excellent earnings, forward guidance, continued spend expectations, that's a green light in regards to kind of the underlying economy.
I agree. And, you know, the two that were lagging, Meta and Microsoft, are still lagging. The two that were on top, Amazon hit all-time highs, Google hitting all-time highs, like the market's loving them. So, I mean, I think that it's interesting how prices continue to show exactly what the stock's been doing. You know, Meta is back below the 200-day moving average with today's open, and Microsoft was below the 200-day moving average. Nick, how are you feeling about the software space with IGV or some of the other software plays? You still kind of picking and choosing? You going for some near-term plays? You like the recovery in that space? I mean, Microsoft, I think, got lumped into that. Meta was a big drop because of the $84 billion write-off on the metaverse that they finally threw the towel in on. But I mean, Zuckerberg has had some pretty flamboyant fails with. I mean, he was looking at crypto there for a second. He looked at the metaverse, obviously, and got all in there. I think AI could be a train that he gets behind, but they still make a ton of money, dude. It's crazy how Facebook is still just a cash machine and a margin machine, but I just think they do a great job of also spending it. So if it wasn't for that metaverse, you know, I think that's what really dumped the stock hard. But I don't know, Meta probably has a better chance of coming back right now than Microsoft. Nobody seems to like Copilot. Everyone's crapping on software. So I still like Microsoft. It's just, you know, I was also in Microsoft for a decade when it didn't do anything. So I get that, you know, that might be the outcome.
Yeah, I mean, recency bias is a real thing, right? You're going to have everybody kind of thinking right now semiconductors cannot go down, and recently that has been the case. But software companies, I mean, for me, I personally still think that they are a good risk-reward based bet, and that's always what I'm thinking about, Chris. It's like the go-to thing I'm thinking about is, do I know with certainty where software stocks are going to go? No, I have an opinion. I think that they are still going to be relevant and strong in the future. But equally, if not more important, is, do I think the risk reward, if I put $10,000, $20,000, $50,000, $100,000 into software stocks, do I think the risk to my money getting nailed is worth the potential reward if I'm correct, factoring in my probabilities? And my answer would be yes. I still think that there are really a good number of really fantastic companies mixed in here. But then there's another layer to it, which is, do I think that the broader market is due for a bit of a correction, a pullback, right? Because I think software continues to, like, here's a case study, right? The stock market pulled back the last couple months. What got hammered the hardest? To your point there just a second ago about which stocks kept winning on their earnings release. It was the ones that were already winning. Same thing on the downside. The software world got hit the hardest. It got hit so hard in the down months that we had compared to semis, which actually had a very modest pullback,
Right.
relatively speaking, to what they had been doing. Right. Look, here's software nowhere near those April lows, and look at, software actually took out those April lows of last year. So you look at this and you say, okay, this is not something that it's not a short-term trade for me. It's more of like, if I like software names, I'm going to stick them in the portfolio slowly because I don't know where the bottom is on this. And it's clearly in the eyes of the market. This is why they say the trend is your friend. You're fighting the trend here if you're really trying to get aggressive and time the bottom on software. So I'm not trying to do that. The companies that I like, I'm slowly stacking positions in, and I'll hold on to them. And I think I'll do okay with them in the longer term. A couple of my favorites, I bought into it. I'm still into it. I have Uber, not really software, but kind of software adjacent to an extent. Microsoft would be one I'm interested in. Salesforce and ServiceNow both are ones that I'm willing to add. Adobe, I'm mixed on. It's challenging for me, but it's kind of one of those things where, like, you listen to the headlines on this stuff and you would never buy these stocks, right?
Right.
But if you look at the underlying financials of these companies, like, I think that there's a decent risk reward setup. And that is, again, the narrative is so hated on these stocks. They're so down in the dumps. Everyone assumes they're going, bust. Then I look at the financials and I'm like, it may be worth a punt for me personally. We still have strong revenue and earnings growth. Again, if I turn off the news for a second and just look at the financials, look at the underlying businesses, and then I localize it and say, I run a software business and AI is helping us, not hurting us. I kind of feel like it's a risk reward bet that I like.
Yeah, Adobe is one that I've been watching for a quick minute. I mean, I looked at their latest offering with Adobe Firefly. They finally started to do away with the the monthly. I mean, I had Premiere Pro and all the stuff back in the day, and that was in college and grad school. Like, and I still remember, like, oh wow, I can get it for $20 a month versus, I mean, if you're not in school or you don't have like an educational discount, it's like $200 a month. I'm like, well, I can see why you're gonna crap on a company that's trying to charge that much. That now you have countless AI engines that are going to show the same thing. So anyway, it still looks good. Excuse me, fundamentally. Snowflake wise, I mean, we're at like a 13 times earnings and still has decent cash flow, discounted cash flow showing a $527 target. That's attractive considering the software space that's lower than, I think Intuit's like 25 times earnings. This is 13.7. I mean, it looks okay. I've seen better, but there's no dividend. Future's a little bit uncertain, but like super financially healthy, past performance decent, and now considered value. Of this software space, the hard part is, like, I just don't know if the market hates it right now. We are obviously trading a lot more extremes, I think, than I felt like we ever have before. Maybe just because there's so much in your face with like what's going up and what's going down. But the fact that this is down, 66% from all-time highs, and we're still at all-time highs in the indexes, and we still have stocks that are carrying the way, and we still have sectors that are doing well. It just seems like I'd be throwing some dead capital at it and hoping for the best, when I don't think the market is going to put this in favor anytime soon.
That's what's hard for me, Chris, is it's like, I see some of these things and I'm like, okay, I love the risk reward on this stock. But if you then show me, well, index is at the all-time high, I personally don't love buying stocks when the index is at the all-time high, because I feel that you have sentiment very positive on stocks. And if we have very positive sentiment in stocks and yet this stock is still getting killed, what's going to happen when sentiment on stocks as a collective group starts to worsen? And so for me, when I look at Adobe, I'm in the same camp. I think that it's again another one that meets the criteria for me of it's worth a punt. I'm of course not financial advice, simply sharing my thoughts and opinions as always, all that good stuff. But I look at like forward PE ratio, 9.2. You pointed out 14.2 or so on the trailing 12-month PE. Price to sales looks attractive. Revenue growth is still there. Earnings growth is still there. Return on equity looks healthy. price to free cash flow is super low relative to its 3-year average. We've also got calculations for targets that are much higher than where the current share price is. You still have solid revenue and income. I think, Chris, that it's like you could kind of, well, let me speak in first person. I could buy the shares and I could sit back and say, okay, market, if you're so sure that this company is going to be obsolete, prove it. But I think that the stock is not going to. I think basically you're making a bet. Do you think this keeps going, or do you think this thing keeps going? And history, again, that is a backwards looking, but history would suggest it's going to keep going. So,
it's not that hard to look at the chart and also just say, look, man, be patient. It's $240, which I know seems like, oh, it's an attractive price, but it could go to 200. It could go to 190 or 150. Correct. And from a technical side, just looking at this, decent downtrend from 630 all the way down to current prices, we are nowhere above my stack of moving averages. As attractive as it is to try to get the price, this takes me back to my old school lessons, which is, buying anticipation, which in this case would be, okay, here's your outer trend line, here's your inner trend line. You have no business buying anticipation right now. As attractive as it is, look, stocks usually, if they're good, especially something like this that's been beat up so badly, it usually will spend time troughing out. And then once it gets on the right-hand side of the trend line, the lows are starting to show signs of being in and safer. And then we start getting back above this cluster of moving averages. And then we have permission to start going up, and we see what that recovery looks like. Yeah. I don't think we have to be in a hurry and buy it at 240 when it might just continue to fall and stay on the left-hand side of the trend line. So this is my anticipation over here, which gets you into a lot of trouble because you're guessing at the lows. This is your confirmation over here. It's a lot less stressful. You don't get the best entry. You're not going to pick the bottom, but it is a lot less stressful and not sitting on a crappy position if it's going to in fact go lower.
Agreed. And I think that you're going to see these valuations be the most attractive before you get a technical bounce, right? Like once you start seeing the technical bounce, those same stats that I just read off, they're going to look a little less attractive. And so you kind of have the trade-off. Do you buy it now, start accumulating shares slowly, which is personally, I think, more how we would approach it. Or do you wait for the technical breakout and start to trade the rebound? And both have merits and pros and cons. Chris, Bank of Japan, potentially a little bit.
I want to talk about that today.
Little yen-tervention stuff coming into the picture, perhaps. Dollar yen breaking down 2.3%. You have pretty much all of the major.
The Swiss yen is what I talked about yesterday. I was so bummed that I was like, well, I could just take a stab at this one. It's down. It was 470 pips, and I was like, yep, that would have been a nice trade.
That's how that goes.
I still don't believe this is sustained, though. Do you? I think if we look at the price action for like the daily close or going into next week, it's like, the dollar yen hasn't broken this trend line, hasn't taken out any major lows. I think this is I don't know. I think this is a job owning intervention versus an actual like price follow through. That's my thoughts.
Here's the thing. I remember in 2022, I got smoked trying to buy dollar yen and pound yen sell-offs, but it was because we were in a bear, like you're in a bear market. It was risk off flow. Right. And I just kept getting nailed on trying to buy pullbacks on it when we would see these types of moves. But between the years of 2023 until now, these types of moves have been aggressively bought most of the time. So I'm still kind of thinking like question one is, are we still in a risk on bull market? And the answer is yes. So that's kind of, so then question two, is this likely to get bought in the mix of risk on stuff? I would say also yes. So
probably,
yeah. I mean, until something breaks, right? Until something changes, you look at these moves and you say, look, I don't believe it. And it's paid you in the last few years to say that to the Bank of Japan. Whenever the Bank of Japan does something, you say, I don't believe it. And then typically, again, past does not guarantee future, but in the last few years, historically speaking, that's been a strong strategy.
Well, I'm looking at it right now. This is dollar yen off the low. So what were our lows? 155 or so. Lows around 155.60. I mean, if you took a stab at buying it right now, I'd say the stop loss is down here below this low. So buying small, let's say you take one entry here, come into this moving average cluster on a daily time frame. So you're looking at like a scaling of like 156, 154, trade small, stop loss. If you get filled on both positions, your stop loss is here. You get back to these highs and you kind of retest 162. You actually have more reward than risk to the upside. If you're wrong, you get out fast, you keep that drawdown, sub 1%. But the market just gave us an opportunity to come right back into the technical buy zones. and see if the market wants to bid it back up. And I'm pretty sure if you look across the board, almost every currency pair on the yen is still showing longer term structure to the upside, right? I mean, is Aussie yen going to break? It's like this might be just a perfect little buy off of moving average. CAD yen coming back right into moving averages. You know, this one may be a little bit more range bound. Swiss yen just playing inside the range. I mean, honestly, if I took that trade yesterday on the Swiss yen, I would not have gotten my take profit target would not have been hit because it would have been right here about 10 to 20 pips off this low. And that low is 197.80 and this is a 198.30. So I mean, we're 50 pips off the lows. Like I would have had my take profit hit and I'd be all of a sudden seeing a 200 pip pullback waking up this morning. It's like that would be frustrating, right? Had this great trade, have 450 pips of potential profit, and then it slips 200 pips out of your favor. It's like that's frustrating.
Chris, we've also got some moves happening in the Swiss franc world. I just was looking across some of the other currencies here.
Yeah, I know.
You just got Euro Swiss franc down hard here today.
Yep.
Pound Swiss franc. So same question here. Are these dips buyable?
I fucking hope so.
Yeah. Yeah, right.
I hope so. The Aussie Swiss is actually showing. I was up like, you know, I would say like $3,000 or $4,000 this last week with the Aussie Swiss. The other ones are just kind of sitting. I've lowered my cost basis enough where it's like I'm close to just getting like this nice run against the Swiss. But staring at it right now and watching the currency strength, you know, Swiss is second. It doesn't look like much because it's all dominated by the yen today. But
Right.
Swiss is also showing some really nice strength this morning. And I'm curious, like, why? I mean, it's an interesting safe haven type look with the, you know, massive Japanese yen move, but the Swiss is always just kind of right there. And we'll see. I think that structurally we'll see. But dude, I've been holding these things for 2+ years. I mean, I'm not holding my breath. I think that I just have to keep the patience going. This is why I trade 90+% of my portfolio is not in currencies anymore, because this will drive me absolutely bonkers if this is what I was focused on, you know?
Well, Chris, yesterday we were talking about how bonds have been highly efficient, moving sideways. There's probably your catalyst for why currencies have been mostly boring, right? Is you have yields or really bonds doing a whole lot of nothing for a long period of time. You know, for people who traded during 2022, 2023, that's the type of environment in currency land that is amazing to trade if you're a trend follower. Now, if you're counter trend, it's not so fun. But you know, if you're a trend follower, if you're somebody who likes movement in the currency world, 2022, where the Fed was just hiking rates, my channel also was really, really popular during that time because I was just talking about the dollar every day. And it was like my views were crazy during that year because, you know, everybody was like, how far is the Fed going to go with this? And it was an unprecedented rate hike environment. That's the excitement that gets the currency world moving. And what does not get the currency market moving is we're just on hold like almost indefinitely, right? Like that's just a much more boring environment.
So I was just taking a quick peek at market breadth. Yeah, I mean, this could be an interesting just one-off type move on the Japanese yen and Swiss. We'll see if summer. I mean, let me go back to 1 month correlation really quickly. I mean, I think that the market is stretched pretty far, pretty fast. You know, 1 month correlation 11.2. If we get down to 8, I'll probably expect a pullback. But I mean, this is the CFD, so we're not quite at all-time highs. We may drift into that 7,200 handle today. I'm seeing this in some of the gamma levels. Is we're opening up about 0.4 to 0.5% higher today in S&P. You know, some pretty big flows up to 7,200. That is fresh highs. I mean, I just think we're in that drift mode right now, where it's like here's what I'd say where I would put the brakes on the rally. We had a decent amount of indecision over these last couple of weeks once we had that crazy win streak. But the market is showing that it's more likely leaning to the upside. If we have another fresh candle here, I mean, Nick, if the market comes back to take out 7,100, then we probably have that pullback towards 7,000. But again, I don't want to sit here and short the market. I'm just going to wait for that to offer an opportunity to buy a dip. The further we stretch and drift to the upside, I think that the stronger 7,000 looks as a nice buy spot, as opposed to 7,000 kind of needs to hold it for like a bull flag type look. But the farther we go up, that's going to be an uglier feeling correction. It's still support. But I don't know, man. I mean, If we take out, I'll just say this again, if we take out 7,100, let's say in the next week as we start into May trading, then the market's due for that pullback towards 7,000, maybe 6,900, 6,800. I don't know what the catalyst is. If you're going to go from earnings are crushing it right now in the U.S. with your top 10 stocks and it's pushing things higher, what's the narrative that the market clings to? Oil prices back to 110, 115, 120? Sure, maybe. I mean, it is a weird market to see that they don't care. Like, markets don't care that oil's $111. That is a problem, because it's like, are you going to ignore $120 oil? You're going to ignore $130 oil if it gets up there? It's like, I don't think the market ignores it above 120. But again,
I listened to someone say, I listened to someone yesterday say, Chris, can you imagine if 6 months ago someone told you oil prices were going to double and the stock market be at all-time high?
Everyone, of course, and everyone was like, okay, so what's our pullback percentage? 20, 30%? I mean, there's no way people expect to have the market absorb this type of rally.
It's all the AI hype, right? I mean, it is absolutely crazy. So, and again, I'm not saying that tongue in cheek. I'm saying, I mean, it's a powerful force. It's a massive stimulus. By the way, guys, we're out of time here. We're going to throw over the show to our next host. I wanted to remind everyone who is here that today is the last day that we're doing our Edge Finder 45% off discount day. If you don't have access to our tools, the stock box that we talked about earlier, the Edge Finder, we are constantly improving these things and trying to build the best tools we possibly can for the average everyday trader that doesn't have a hedge fund budget. If you're interested in getting access to our stuff, take advantage of the sale discount by clicking the link that's just been dropped in the live stream chat. Speak directly to a member of our support team who can set you up with access to Edge Finder. If you're interested in our VIP trade alerts, as well as Chris Pulver, all of our trade alerts are available as well for 45% off for a limited time here. So take advantage of those discounts before they end by clicking the link in the chat, in the live stream chat right here, right now. Okay, guys. Up next, Miko Audu is taking over the stream. Chris, thanks so much for coming on, man. Appreciate the conversation as always.
Okay, see you tomorrow.
See ya.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
All right, guys, hope everyone is doing well. Happy to be back. As always, if you guys are interested in any particular markets, want my perspective, feel free to drop it in the chat, particular timeframes as well. More than happy to take a look. But for the most part, I'll be going through markets which I'm interested in, which I'm looking to trade, which I am trading, and my plan for the rest of the week, and maybe a little bit going into next week as well. So I'll cover a bunch of markets, but we'll start with the dollar. The DXY, we'll take a look at some USD majors and some indices as well. But I mean, altogether on the dollar from a technical perspective, it's not very pretty. We're not really seeing the best price action. And again, looking at the bigger picture when things are quite choppy, normally the best thing to do is look at the bigger picture and what's the overall sentiment. And price is pretty flat, and it has been flat for quite some time. We've been speaking a lot about this. We've got this large range on the daily, weekly chart, and at the moment we're kind of trading at the equilibrium, at the midpoint of the range. And this is notoriously a place, or fair value of that range. So I'm not really expecting to see, or at least from a trading perspective, really good buying opportunities, really good selling opportunities. This is not really the place I want to position myself for a big swing position, at least. If I want to do that, I want to be either at the highs or at the lows, or of course looking for breakouts in either direction. So at the moment, I'm kind of very short-term minded with dollar opportunities, just because direction isn't clear. And if direction isn't clear, I want to be looking to buy as low as possible, sell as high as possible. Of course, that would mean the low of the range and the high of the range, but it could be some short-term intraday opportunities, which I'm looking at, at the highs here, at the lows here as well. So yeah, with the DXY, I'm looking for short-term opportunities, and that kind of looks the same when I go throughout the other USD pairs. So take a looking at Euro USD. I was actually looking to take a buy here, but I held off this trade because I wanted to take another trade on US 30, which we can take a look at in a second. But essentially, it was just looking to buy at the low of this support level. Effectively, what we've just seen with the DXY. Price traded at support. We've had that natural mean reversion environment. If price does reject this well, so it's a likely area for a bounce. But the key point is that we're looking for a short-term move, or at least I am anyway, because I don't really trust Euro USD to give me a clean swing back to highs, because I don't really have the trend to back that up. Looking at the bigger picture, it's flat as well. I'm not going to be overly bullish. I'm not going to be overly bearish. So I'm just going to be looking for those short-term intraday opportunities for buying and selling. And I quite like the support level here, but like I said, I held off for US 30, which we can take a look at in a second. And also like the shorts at the high here at 1.184. Again, significant level. If we reject well, I would anticipate some downside. And I'll just be keeping it short term, realizing profits a little bit earlier. You can leave, positions to trail. Who knows? Maybe it could be a big winner. But it's just very, very choppy conditions. So I'm not trying to overstep price action here. Pound USD, same situation really as well. We had a really nice break and retest recently for pound, similar to euro, although I'll probably say pound. The price action in pound's been a little bit cleaner, but essentially got formal resistance here. Those are your structural highs, keeping us bearish for the first part of the year. Then price has broken through that and flipped and turned support. So very, very kind of textbook price action here. Lovely test last week, another test this week as well. So this is, again, where you want to be positioning yourself long, of course, hindsight. But I was speaking about this last week as well, just buying low. There's nothing necessarily magical about it. It's just when conditions are choppy, you want to be looking to fade the lows, fade the highs. And of course, eventually price is going to break out. And then conditions will change and we'll change with it. But now that price has had that reaction, it's either again we come back to that same support level, a really nice place for a buy, or we return back to the highs, and similar to euro, looking for a short at the high there as well. So yeah, the bias is pretty much the same with pound USD. And I'll take a look at Aussie dollar, and then I'll go to the Dow Jones. Hey, what's up, people? Hope you're doing good. Yes, we can take a look at Aussie CHF. Good afternoon. Hope you're all well. What's up, Yoshi? Hope you're doing good. Yes, yeah. The yen's actually looking quite crazy. So actually, we'll get to the yen. I'll go through Aussie quickly because there are some big movers in the market. But yeah, Aussie dollar, just keeping it short and sweet. We've got another ranging market. The DXY is pretty much copy and paste that across all the USD majors. So not really seeing much trending opportunities. And as I've been talking about with Aussie, just keeping it simple, what we do here kind of sets the bias, sets the tone. If we kind of break out of this miniature consolidation and essentially reject the high of the range, I'm looking at pushback to the midpoint. If price breaks the high here, then I'm looking at possibly a trend forming. We'll see. But yeah, I'm not looking at any opportunities within the noise of if I drop to the 4-hour chart, I'm not really looking at much opportunity within this area here. So I'm kind of waiting for price to commit. Whether it's going to commit lower or higher, I don't know. But that's essentially what I'm waiting for Aussie dollars to do. Yeah, in terms of some of the other pairs, so yeah, crazy moves on the yen. I haven't actually looked at Aussie CHF, so I don't know what that's doing. Okay, looking pretty bearish as well. So yeah, Aussie CHF is interesting because overall it's been pretty bullish for quite a while and just kind of steadily pushing away. And I would still be very bullish on this one. There's no need to kind of do anything differently until structure changes, and that would be breaking significant lows. I know the market's probably a bit overextended, a bit stretched. Maybe it's due a bigger pullback, and yeah, I would expect that to happen at some point. But until the market says otherwise, I'll still be looking to buy. Now, this would be my area of interest, 0.56. If we have a deeper correction, I'll look at this low here. So these are the two areas. If we were to break through both, then that would signify probably a reversal or maybe a more complex pullback. But yeah, I would be very bullish on Aussie CHF, just looking to float that continuous move. It's been pretty persistent, no need to overcomplicate it. If we break through both areas, then yeah, we can revisit that bias. But for now, I would say it's pretty simple. I mean, at the moment, of course, very strong bearish candle there. So I want to see some signs of that momentum slowing and some wicks. I wouldn't buy straight away, but it's definitely in the area of interest where we could form another high low and could see that trend persist. So overall, still very bullish on Aussie Swiss. In terms of dollar yen, of course, the yen is moving very, very wild. Yeah, so very interesting price action here. With dollar yen, the funny thing is a lot of people have been speaking about this, the yen potentially having that strength come into play at kind of at any point in time, really, because it's difficult to predict these events, and it looks like we're kind of seeing the yen strengthen very, very rapidly, and we don't know how far this move could go as well. It might not necessarily be done, but yeah, very aggressive move, and I would say this is an automatic kind of freeze or pause any opportunities on dollar yen. Coming into the week, I was actually very, very bullish, and it was actually a part of my watch list, dollar yen. I was looking for some buys for this one. I mean, for the most part, we've been stuck in this range for quite some time, so I haven't been interested within the range. But I said if you can get a nice breakout this week, I'll be looking for a retest and a buy back to highs. I mean, looking at the bigger picture, the market is overly still very bullish, and we still got that significant high there from 2024, which I'm still looking for price to go and retest. But of course, this has changed my plans significantly because, again, I didn't even get a retest anyway. So I'm always looking for price to retest my areas, especially with candlestick patterns as well. And I mean, for this very reason, to be honest, it keeps me out of trades like this. But yeah, very significant close back below. And of course, the 4-hour candle that just closed completely just obliterate that whole range. So yeah, I wouldn't do anything really with dollar yen because, like I said, we don't know how much more this has to the downside. It could be done, but I wouldn't be surprised if this trends for maybe a few days, maybe even a few weeks, to be honest. So from a technical standpoint, this is just kind of heavy risk situation, which I would just be I would be very, very patient with. So dollar yen, I would not be looking to do anything with this one. Keep it simple. If the market's very volatile, doing something abnormal, those are normally the best times to stay out of the market, especially in terms of managing risk. So yeah, I was pretty bullish. The thing is, I am still pretty bullish. From a technical standpoint, nothing's changed. Until we kind of break this low here, I still do see price doing this eventually. But it's just, okay, where's that bottom going to form? I'll let time be the answer to that. So dollar yen, I'm not really interested anymore. As I said, I did take a long on US30, literally just before hopping onto the stream. Yeah, I've been pretty bullish on US30. I like it because you got the Nasdaq, you got the S&P. They've kind of just made all-time highs. Well, more than a week ago now, but they're very bullish. And US30 is kind of lagging behind a little bit. So I see that as an opportunity to kind of take advantage of the lagging indice behind the others. And simply just looking to trade it back to highs. Nothing more complicated than that. We've seen a lot of momentum. Price had a very significant break and retest of structure here. I would anticipate our next destination would be the all-time high, and most likely probably new highs above that. And been eyeing up longs all week. We've been very, very flat, so I wasn't too sure if price was just going to break out and zip higher, or maybe give us that pullback into the zone, and we did get that. And I mean, the entry could have been a little bit better, but especially when you use candlestick patterns, you can't really decide too much. You kind of react into the market. But essentially, hopped on an entry on that candle close, and essentially looking for a push back to highs, and that's where I start to take risk off, take some partials, and then just trail, see how far we go. Who knows, it could be a big run, or maybe price melts back down, who knows. But yeah, US30, I've been watching it kind of since the breakout here, so for the past few weeks. Didn't really get an opportunity till now. And I look at the S&P and the Nasdaq. I mean, they're still very bullish as a whole, but It's just I don't really see much opportunity to jump into some longs, especially from a swing perspective. I think, I mean, of course they could still go a lot higher, but I'd just rather be buying below the all-time high. Intraday, of course, you can take advantage of some opportunities there. I was speaking about some opportunities on my stream yesterday. Very choppy price action where we talked about a double bottom here for pushback to highs. Nasdaq, we're looking at something similar as well. Yeah, I was talking about retest of support here. Unfortunately, looks like the market was a bit too bullish for that. But again, a pushback to highs, just keeping it very simple. There's a lot of momentum in the market right now. And as a technical trader, I just want to be looking to ride that momentum. So yeah, hopefully that made sense on the indices. Okay, I can take a look at pound CHF. We can go through oil as well. So pound CHF, again, not really a market I've been too focused on at the moment. To be honest, the past few weeks, few months, haven't really been looking too much at the price action pound CHF, but nonetheless, still a market which I do trade from now and then. And overall, the bearish sentiment on the higher time frame perspective is still in play. Still overly seeing lower lows and lower highs, even though the trend's not the strongest. But that bearish kind of drift is still at play. And I would expect longer term, we could still probably push to these lows. But of course, a lot can happen in that time. But anyway, in terms of opportunities right now for pound Swiss, so yeah, I would be a little bit skeptical now, because of course this is pretty aggressive momentum. You know, something we're seeing a shift, because price has been very, very corrective. It was trending high, and now we're seeing a really commanding move down. So, you know, this is a bit of a shift, and it could mark the next high in the longer high time frame trend. And if that's the case, I want to see this low go. But at the moment, I'd probably be looking at buys at this support level. And that's the next best opportunity. If I was trying to be a little bit more aggressive, I would probably look at shorts at this high as well. Because the way I see it, pound CHF has just been in a bit of a range. This looked like the 4-hour bullish trend was going to continue. It's essentially failed. So we could see price come back and revisit the high of the range and then continue lower. But I like the buys here because I'm still in line with that bullish trend in the 4-hour chart. So if I can see some healthy rejection there, I think we can get a decent bounce. Now, I'm not forecasting this. If anything, I do think long term we're probably going to be going down. But in terms of short-term move, for a day or two, I do think we can probably squeeze some profit out there, especially if rejection looks good and you can find a nice tidy stop loss for the trade. I think that's a really smart place for a long. And then, of course, we can maybe speak about shorts later on. But yeah, pound CHF, I'm looking at this as a fake out. If we revisit resistance, I think that'll be a smart place to position short, especially with a stop loss above or even safer above the highs. Then yeah, we could very much see some more downside from that. In terms of oil, oil is not really a market I actually do trade, so I don't really keep too up to date with oil. I do look at it from now, every now and then, but in terms of trading, I don't trade the market. But yeah, in terms of oil, I mean, the daily chart looks really, really choppy. I can't lie, it looks really, really choppy. I mean, it's just the volatility. It just makes things very awkward. You can see how kind of sensible price was here, and of course, due to recent events, price is quite volatile now. So in terms of technical standpoint, it's probably not the best market to even be looking to trade. I mean, I'm very big on technicals, but of course fundamentals play a huge role. I mean, it kind of dictates direction. Technicals is all about reacting to historical patterns, but of course historically this is now a new kind of situation, so you're going to see more volatility come into the market. Regular stop losses might have to be a bit bigger, or they have to be bigger. The average range of each candle is going to be bigger as well. So if I'm looking for opportunities here, I'll just be looking to try and sell high. Not necessarily because I'm bearish, because I'm forecasting a reversal, but that's clearly where price is struggling to break through 117.5. If I can see some rejection there again, if I can position a nice stop loss above, that would be a nice short, keeping risk minimal as well. And if we do see a reversal as well, you're positioned well to really take advantage of that too. And you could probably say the same about the lows here too. I mean, we're quite far away, but it's basically the same situation there as well. So yeah, I wouldn't really be too heavy on direction, especially from a technical standpoint. I'll be looking just try and position myself well for what price is doing, which is kind of in a range here. So if I can short as high as possible or long as low as possible, I know that, okay, if the trade does become successful, the risk reward is probably worthwhile. And of course, if I do take a stop loss, if I can keep my risk managed pretty well, that's a price you're probably willing to pay. So yeah, with oil, not really a market I trade, but if I had to, I'll be looking just to play the range really. I wouldn't be looking at any kind of directional based plays, and things can change very quickly with oil as well. I can go through UK 100. I'm seeing pound NZD as another request as well. More than happy to take a look. So UK 100, we're seeing a bit of a bullish day as well. So it looks like it's a good day for the indices at the moment, or yeah, a good day for the indices. In terms of the Nasdaq, not the Nasdaq, sorry, the FTSE, price action is not as clean. I say that because, of course, it looks like price is putting in this low, and then since that's happened, we've had pretty consistent bullish structure, so higher highs and higher lows. But since the high here, we've neglected that. Price has broken through structure, so we've had a deeper correction. Now, this could just be a deeper correction of this move, and maybe price does continue, but it's a little bit more ambiguous now. Yeah, we could even see price do something like this and trend lower. So in terms of the technicals, it's not very clear for a buy, just because price is now kind of broken out of that structure. If you compare it to kind of US 30, which is the trade I'm in, you can kind of see price is still within this structure here. Oh, let me do that. Still within this structure, so it's kind of like price is still obeying this kind of trend, which is the reason why I'm bullish. If price was to move a lot deeper, I wouldn't be as bullish, and I probably wouldn't be taking a trade. So yeah, with the FTSE, it's kind of like I would still be bullish, but I would be very careful, and I wouldn't be surprised if we were to push up and then just come back down again. So yeah, I would say in terms of technicals, I'd probably be looking for like a short-term sell, especially coming back into this range. I'm not necessarily bearish bias, but because we've broken through structure and pretty meaningfully as well, a retest of that area is probably likely to give us some downside. Maybe we are going to break through longer term and push back to highs, but this probably would give us maybe a couple of days, if we can reject it well, of some nice downside which we can profit on. Yeah, and if I was looking to buy, I'd probably wait a little bit deeper down here too, but again, I would look kind of short term, just because I don't really see the bullish structure as high quality anymore. So yeah, with the FTSE, I'll just be looking more so positionally to place myself well, rather than bet that we're just going to continue bullish. I mean, I would expect us to, but I'm not the biggest fan of the price action compared to some of the other US indices. In terms of pound NZD, now pound NZD has been interesting. It's still very, very choppy. We've seen some strength yesterday, which price has already kind of retraced half of. Yeah, I'll keep it simple with pound NZD. If you can push back to the highs, that looks like a smart place for a buy. Push these lows, that looks like a smart place for, a smart place for a sell, sorry. And if you can push back to these lows, that looks like a smart place for a buy. Yeah, in terms of direction, I wouldn't say there's a clear, yeah, maybe there's a bullish drift on the higher time frames, but that wouldn't make me not take any sells. It's not a strong enough trend, which I would just say, yeah, I'm completely only looking for buys, especially on an FX pair as well. So for pound NZD, I'll just be looking to try and position myself well in the context of price action, and to me that would be up high and down low there. So 2.28 and 2.32. Those are the areas which I would be looking to try and position myself But yeah, very, very choppy price. I want to be at the extremes of that where I can maximize my risk reward as well. In terms of, we can go through USD as well. I think there was an earlier request that I missed. But yeah, in terms of USD, which of course is a very similar pair to pound entity. Yeah, in terms of the bigger picture, you probably would say this is a much better trend. I mean, when we were trending here, I was actually just focusing on buys because the strength of the trend was a bit more meaningful. But since we've had this kind of bearish move here, the trend strength has kind of dropped, and it's a little bit more 50-50, especially with this rally here not pushing back to highs yet as well. So that's kind of signifying that this trend is maybe coming to an end. Maybe we're going to form a bigger consolidation or even start trending lower. So in terms of euro entity, what would I be looking to do? Well, yeah, I would be looking for a similar opportunity really. Buys low as we approach this low here. Again, it heavily depends if price can reject this area. If we're seeing a very aggressive close below, I wouldn't be talking about buys anymore. So it's important that price gets in and starts to hold, and then of course that makes the buy meaningful. And presumably you're coming back to retest this larger range here as well. So yeah, in terms of direction, I wouldn't be overly bullish, I wouldn't be overly bearish. I mean, this would still be a meaningful place for a sell as well. So yeah, I don't really like the price action between the two, to be honest. But if I was looking for opportunities, it would just be kind of more short-term opportunities, looking to buy low, sell high, and not really too focused on direction, and just look to see if support can hold or resistance can hold. And if it doesn't, reanalyze and go from there. Even some buys at the low here would make a lot of sense. But yeah, for a lot of the FX pairs, it has been quite choppy. So I've been focusing a lot on mean reversion and just position myself well in the market. I mean, the yen pairs have been okay in terms of a trend. They've been trending relatively well, of course. That's kind of been put to bed a little bit with this price action here. So I'm being patient with the yen pairs across the board. I mean, dollar yen was the one I was focusing a lot this week. But yeah, of course, now with this move, I probably would just put this to one side for the rest of the week. Because especially when volatile moves like this happen, because the big question is the volatility over? Is that kind of initial bearish move, is that over? Is price now going to start to find support and start to maybe consolidate and find an equilibrium? The answer to that is we don't know, because we've seen that initial reaction. And if you look at previous interventions from the yen, you get that initial reaction, and sometimes price will consolidate for a little bit, and then you see some more follow through. And that's really what I'm trying to find the answer to. Because if this is the end and price is going to start to consolidate and find its feet over the next few days, maybe the next week, then yeah, maybe we do start finding our support again, and then maybe that higher time frame trend just does continue. And then yeah, I'll be looking for buys again. But if not, if we still got more downside, I want to know that as well, because that would be the red flag for buys really. If you start taking out significant structure and keep showing that strength, then yeah, I would just very much want to be on the sidelines for the yen, not try and predict anything, focus my attention elsewhere. Yes, I did check the FTSE. I basically just said I'm only looking for any short-term plays. It's not my favorite indice right now, just because of this larger pullback. But I like the zone there, which we left behind. I think this is a nice place for a short. Again, nothing kind of significant. I'm not looking for a push these lows. It's just more of an area which we're likely to see a reaction from. Even likewise, I would say this area here as well, kind of the start of that bullish move too. So I'm looking for kind of short-term plays on the. I mean, I do expect the FTSE to eventually push back to highs, but because of this deeper pullback, it's going to make things awkward. My attention's a bit more on US 30, which is a bit cleaner. Had a nice pullback. We've seen a nice reaction there as well. I'm looking for that to return back to highs and kind of follow suit with the S&P and the Nasdaq as well. So I quite like the US 30. The FTSE, not so much. But yeah, that's kind of what I'm looking at. And yeah, guys, we kind of run to the end of my segment. I do appreciate Nick and the team for having me on. If you guys have enjoyed it, drop a like on this stream, and of course feel free to check out my channel as well, where I do similar content and share my ideas and trades there as well. You can check out my YouTube channel there too. But guys, I hope you have a good day, a great end of the week and a great weekend, and I'll catch you all in the next one. Take care.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello, hello. Happy Thursday, ladies and gentlemen. Hope you're all well. Okay, there we go. Chat is open. Hope everyone is good. Why are people hating on the yen? I'm not sure if anyone is hating on the yen. But yeah, we've had a very strong move to the downside today. I had to take a little bit of a loss on my Swiss yen position. So I had a buy position up here. Woke up this morning, not very good. Wasn't very happy about that, but it is what it is. It's all right. But yeah, large move to the downside. I think it's over 3%. Let's just check. So yeah, 3.22% to the downside. Obviously, peak to trough on dollar yen. I'm not 100% sure if this was an intervention or if this was just on the back of the announcement of basically a possible intervention. So either way, doesn't matter. I think some longs have been liquidated today, including me. But yeah, we keep on moving. So open positions still in the Aussie New Zealand. You know, as I said yesterday, this position's locked in some profit. This position, the second position, is also locked in a little bit of profit. Third position is break even. So yeah, it's just a case of letting this one run. New Zealand US dollar did have a very nice move yesterday. Obviously, on the back of the yen strength, the dollar has lost some of its strength. So we have seen a bit of a pullback, but this is also a break-even position or a risk-free position. So no stress with that one. And I think we're going to have to cancel the pending order on euro pound. Unfortunately, we just could not seem to get tagged into this one. So we had quite a few optimistic periods, you know, where like right here where it looked like we were about to get tagged in and then it just never happened. Same thing right here, never happened. And now it looks like we're on our way to make some new lows. So yeah, unfortunately, looks like we've missed this one. What do you think about Aussie Swiss? Yeah, so we got taken out on the Aussie Swiss yesterday on a trailing stop. I do still really like it actually, but yeah, we were just following the rule set. But yeah, as we were talking about yesterday, I think we were looking. I can't remember where we drew the fib from. It might be the most recent low over here. Yeah, so we were looking at something very similar to this yesterday on my segment. So we've got these previous highs over here. Pull back into, I mean, we did temporarily break below, but given the yen strength, I'm not going to be, you know, I'm not going to be overly, what's the word, like nitpicky or whatever. So we've come back down, retest of this level. We've also pulled back into the fib. We're still in a really nice bullish trend with the moving averages, and we've still got Australian dollar Swiss getting a very bullish reading on the edge finder with a score of 14. So overall, I do still really like it, and I wouldn't be opposed actually to just being a buyer again, possibly like this. So if we can get a bullish H4 close here, I'd be quite happy to be a buyer. Whether I actually will is a different question, but just on surface level, I think it's pretty nice. Japan did intervene, right? Made dollar on JPY longs this morning. Very nice, Sluggy. Well done. Same on euro pound, couldn't catch. Yeah, it's one of those things. I'm sure an opportunity will come at some point, because what we might be able to do is if we just scrap all of this and we start fresh, we might be able to do something like this. Wherever the next low is printed, we might end up with potentially this being the new entry point. Oh, let me just, of course, this is, I have no idea whether the next low will be, but this is purely just for sort of giving you the idea of what I'm talking about. Something like this could be the next chance. So if we do end up coming lower, creating a new low, we just do the same thing. We look for a pullback, retest of this level, and then a continuation lower on the fib rejection. So there's always opportunities, but yeah, it's just a case of having to wait at the moment. Joshua, hello. Okay, so Australian dollar Swiss we've covered. Pound Swiss we've spoken about Pound Swiss quite a few times, so I'm not going to go over that one unless anyone specifically wants me to. The Australian dollar is still getting a bullish reading individually, which is nice. However, what we were discussing yesterday is the overcrowding of the Aussie dollar. So let's actually see what the COT report is giving us for the AUD. So actually, longs have been reduced over the past, well, actually not really, I suppose they were relatively flat over the past two releases, reductions here. So I would still say that the Australian dollar is quite overcrowded. You can see long-term sort of accumulation here, flattening out here. And as I've already said previously, a lot of the Australian dollar positivity is kind of priced in. So at some point, we are going to start seeing some nasty reversions. So I'm just not overly interested in being that involved. Of course, I'm already in the Aussie New Zealand, but those positions are secured. So I'm, yeah, not interested really. Let's have a look at oil. So let's see. Because oil has been doing very well over the past couple of days. So if we go to the daily time frame, it's just been a crazy buying fest here. I've been completely out of oil, unfortunately, but it's one of those markets right now where it's just too sensitive. I don't really want to be, or I don't have the confidence to sit through it. However, yesterday I was saying, wouldn't surprise me if gold reaches this level. It actually came up pit perfectly. So, you know, call me ICT. However, if we sort of put the geopolitical side or the geopolitical landscape to the side and we just look at what we normally would, which is the trend, the market, and the edge finder, there is an opportunity. So oil is getting a bullish reading of 7. We've got a pretty nice bullish trend here. So what we could potentially look to do is just take the fib from the low, wherever you draw the low. In my book, I would consider this the previous low. Some people may consider it down here. Doesn't matter too much. And then from there, potentially look to be a buyer from this level. So you get obviously the break of the previous structure, retest, bounce off the fib. We've still got the bullish trend. We've got the edge finder, and then look to be a buyer. I think that's pretty simple. But again, as I said, given the situation with oil, it's only going to take a headline, a tweet, and the position could be completely ruined. So take caution. Hello, ICT. Ball out. Hello. You got 24 ES shorts. Yeah, I mean, I don't mind the idea of being short on the S&P, to be honest. It's a little bit too aggressive for me now. I'm not really an aggressive trader, especially when it comes to the indices markets like the S&P. However, I do see short opportunities potentially coming later this year, but we're not going to go into that today. So Swiss yen's getting a bearish reading, which is a little bit annoying because obviously I was in a buy position and got absolutely destroyed. So goes to show you, I say it all the time, it's very rare that I'll go against the edge finder where the edge finder is giving one reading and I'll take the opposite position. Sorry, doorbell. I'm not sure if you guys heard that. Where I take the opposite position every time, or like 9 times out of 10, it just doesn't work, and it makes me look like a fool, which is what has happened today. So there you go, kids. That's your lesson for today. Do as the edge finder tells you. Could be a big day if it holds down. Yeah, for sure. Might not be done. It might not be. We'll see. It could be a bit of a buyer's trap, and I don't really like to use those types of those types of words where it's like a trap or whatever. However, this seems like one of those situations where what you're going to get is massive amounts of retail traders looking at this drop, looking at this previous bullish candle and saying, "Oh, it's got to come back up. It's got to come back up." and then it just plummets even more. It's just the way the markets work. So it wouldn't surprise me if that is what happens. Of course, again, I don't know, but it's just the way the way of the markets. I'm sure we've all been there at some point where it's like, oh, it's got to come back, and then it just continues. I mean, some Euro Aussie shorts, very nice. Let's see, Euro Aussie here. Yeah, I mean, as we were saying yesterday, I think if I take my personal bias out of the market or out of the view, which, as I said earlier, is more the overcrowding of the Australian dollar. If we completely remove that and just look at the technicals, look at the edge finder. So edge finder does still have a bearish reading, so yeah, it's fine. Trend is bearish. Edge finder reading, it seems fine to continue shorting. However, after this amount of downside, it just makes me cautious. However, that also doesn't mean that it can't continue lower. So I think if you were trading these pairs like pound Aussie, euro Aussie, Aussie yen, Aussie Swiss, well, maybe not Aussie yen actually right now, but Aussie Swiss, you get the idea. I wouldn't necessarily look to counter trade the Aussie. I think still trading with it is a good idea. But again, it's more about just being cautious and being aware that a lot of the large move has already happened. Again, this is all just my opinion. It's a very British doorbell. Yeah, I got my slave, I probably shouldn't use that word. Got my servant to go and open it, or my butler. So the carry trade unwind could be something. I don't know. No, I wouldn't say this is going to be I should probably clarify. When I say further downside, I absolutely do not maybe that's not the right way of saying it. I do not think this is an unwind of the carry trade and we're going to see dollar yen start, down, 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 down. What I think this is yes, it's a bit of an unwind, but not yeah. If we look at what an intervention is, it doesn't do anything. It's got no function other than a temporary solution. It's like, it's like breaking your leg and putting a plaster over it. It's not going to do anything. So yes, maybe intervention fears, you take some profits, maybe you get some short-term sells, but it's not a rate change or it's not a rate hike. It doesn't do anything. It's a short-term bolster for the yen. So even if it does continue lower, I would highly suspect we're going to continue higher over time, unless, and the big unless here, is if we do get an aggressive rate hiking cycle, which I do not see coming, or I wouldn't expect that to happen. So downside could continue, but again, when I say that, I don't mean it's going to, rally all the way down to 100 or 120, 110. I think, maybe we could come and fill this gap down here at 140. Where is this? 148, let's say. I would say that's kind of worst case, or like the most we could see. However, again, I do want to clarify, that's just my opinion and my view. I could be wrong. I've got no money in dollar yen, so if I'm right or wrong, I really don't care. But that is what I would. Oh, that is my current view. Got what? Yeah, that was a slip of the tongue. Posh, but I'm joking. I wish I had a butler or a servant or whatever you want to call it, but no. It's my beautiful girlfriend that gets the door for me. I have to say, hey, I'm going on stream to talk to people I've never met about markets. Please make sure you answer the doorbell because DHL is coming to pick up a package for me. I've been holding Euro pound shorts, got trailed out, and now it's continuing down. Yeah, it's not been the easiest market. Well, actually, when I say easiest, it's not been difficult necessarily, but it has been ugly, I suppose is the right word for it. Choppy, 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 slight move down, choppy, 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 slight move down, choppy, choppy, move down, choppy, choppy, choppy. And that's kind of just what this market does. It's a very horrible market to trade. And when I say trade, I'm more on an intraday side or trying to get that entry. It can just be so frustrating because Euro pound is a very correlated asset, or a very correlated pair, sorry. It's not something that has these really smooth moves very often. It generally does have a lot of chop. Of course, you get the trends, but within the trend, you do get a lot of sort of range-bound price action, a lot of wicks. It's not smooth by any means. But either way, we'll try to find an entry wherever we can. DXY, is it crashing? No. I would not consider this a crash. I suppose that, it depends what time frame you go to. If you go to the 5-minute, maybe it looks like a crash, but no. It's just the relationship of the financial markets. When the yen strengthens, the dollar weakens. When the euro strengthens, the dollar weakens, vice versa, typically. It's just the capital flow dynamic of the market. So the dollar remains in this sideways range. Well, actually, yeah, no, I was going to say there's a slight trend, but there actually isn't at all. So it's just sideways ping-ponging up and down. Unless we break, whether it's upside or downside, then I cannot really give you anything, because what can I analyze there? It's just a higher time frame daily range, and we've not broken out of this range really since let's say May 2025. So yeah, it's fun stuff. The dollar is giving loads of brilliant price action for us to trade. What do I think? Aussie New Zealand, is it too overbought? Yes, it is very overbought. I mean, I'm still very optimistic. I'm not bearish by any means right now. So I'm in longs. I'm looking for 1.25. That's my... So I don't really set hard take profits, but that's where I'm very likely to get out of this market. So when I say it's overbought, there's a couple of things going on. So actually, RSI on the monthly is extremely overbought here. The last time it was this overbought, we got a very aggressive mean reversion back into this range. It's a 14-year range. We tried multiple times to break out, continued to fail. So yeah, I mean, again, as we were talking about with euro pound, the Aussie New Zealand is a correlated pair. So I wouldn't expect this to continue I wouldn't expect it to just run and run and run. So yeah, mean reversion, I would expect to come at some point. I wouldn't say it's now. I'm not sure if it's tomorrow. I'm not sure if it's next week, next month, 6 months. I don't know. But yeah, I wouldn't really be comfortable buying it right now. I mean, would I not? I probably would. That's a lie. I would feel comfortable buying it now, but I'd have to use lower risk, which is one reason I've scaled in 3 times. So I've had this opinion for quite a while. When I say quite a while, I mean the past couple of weeks. So this position was relatively small. I didn't take my normal risk on it, which allowed me to, trail and be a bit more aggressive with these 2 scale-ins. And that way I'm sort of staggering the risk as the trade proves itself, rather than just going in with my initial flat risk. So yeah, we'll see what happens. But another thing is, it was either Goldman Sachs or JP Morgan. One of those 2, I can't remember which one, has got a position on Aussie New Zealand around my entry, actually over here. Their hard take profit is at 1.25. So take that as you will. Institutional side is still bullish in terms of their positioning. But yeah, it's overcrowded, technically extended. So yeah, take caution. Just enter GBP AUD shorts. Fantastic, Yoshi. Well done. Let's take a look. Here. Yeah, I mean, it looks fine technically. Pretty nice level actually through here. I quite like that. So let's just see. Yeah. I mean, previous resistance turned support over here. We've had the break, 2 retests, double top on this one. We've still got the bearish trend. We don't have the edge finder reading, and my caution would be that the GBP is very bullish and the Australian dollar is also bullish, but the GBP is more bullish with 1 point higher. Now, that doesn't mean that we can't see further downside, but what it does tell me is that you're trading 2 strong currencies. So you've entered GBP AUD. What was your view for not entering into Euro AUD? That's the one thing I would think about, because that might be something to obviously take note of. Interesting your take on pound CAD. Pound CAD actually very similar to what I just said on the pound AUD. You're trading 2 strong currencies. So as we said, GBP getting a very bullish reading here. The market seems to have front run a lot of BOE hikes over the past couple of weeks or past month or so. We've also had obviously stronger oil, which feeds into a stronger Canadian dollar. So right now we've got a strong pound and we've got a strong CAD. Which side are you going to bet is going to continue higher? So obviously with the UK, or if you're trading the sterling or the pound long, you would be obviously expecting for better data, rate hike narrative to continue. And you'd also want to see de-escalations with the Middle East and Strait of Hormuz. But then obviously if you're short, then you'd want to see the opposite. So it depends. I personally have no view. I don't like to trade these types of markets where you've got arguments to be buyers of both currencies. Normally when I'm trading, I like to say, okay, this currency doesn't make sense to be a buyer of, but this one does. And then you end up with a situation where you've got a relative strength trade. But yeah, pound CAD for me is a no-go. Dollar CAD. Good question. I don't really have anything on dollar CAD, to be honest with you. I'm just thinking. So dollar, I don't really have anything on. I think the dollar's flat. Let's just double check. See what the US heat map is saying. Yeah, so it's 45%. It's pretty much flat, maybe just slightly under. So I've got no bias on the dollar, but then again, you take the Canadian dollar. Are we going to get escalation or de-escalation tomorrow, next week, you know, in the next hour? I don't know. And it's that type of uncertainty that just doesn't work well with my type of trading. I like to be able to sleep at night and say, okay, I don't, you know, there's no immediate problems, or if there is, you know, it's not something I could have avoided. Whereas if I was in dollar CAD and then we did get some escalation or some crazy de-escalation, I get stopped out. It's like, oh, I could have avoided that by, you know, just not being stupid or not being or anyway, you get what I'm trying to say. I can't think of the right word right now. But yeah, dollar CAD, pound CAD, in fact, Canadian dollar in general, don't really have too much for it. Let's take a quick look at Bitcoin. Actually, hold on. Before I continue, let me just... There we go. I don't want to hear that. So I'm at 9:30, and then Alan. So we've got Alan coming on in about 8 minutes. That's fine. Keep that in mind. So Bitcoin, what's going on here? Seems like we're still seeing a little bit of strength. However, for those of you who watch my segments frequently, you'll know that I've been talking about this level and this level as potential sort of retest and continuation lower ideas. I'm not necessarily bearish, but I'm also not really bullish. Bitcoin's not my thing. I've got no positions on it really, other than some longer term investments. But my concern is that we're going to reach this level as we have, and then come a little bit lower, maybe retest these lows, and then we could get a move higher. Again, I don't know. I don't really care. But I do find it interesting. I quite like to pay attention to what Bitcoin's doing on these streams, because I know some of you guys trade it. On the other hand, rather than looking at the bear case, there is quite a nice bull case, which is down here. So previous structure, obviously previous highs over here, minus support over here. I mean, you know, a little bit choppy, but we can consider it if we want to. Then we came down to the weekly 200 moving average. Really nice rejection of this level. So if we look at the overall structure of this, pretty nice move to the upside. We've broken that structure. Break, retest, continuation to the upside within this weekly 200. So there is arguments on a technical basis for being a buyer and a seller right now, in my opinion. And of course, that's a weekly time frame. The daily is still bearish. The H4 has flipped bullish, but it looks like it's struggling a little bit here. On a microstructure level, we are, you know, double top, lower highs, lower lows getting printed right here. But in terms of the moving averages, we are still moving to the upside. So do with that as you will. No pullback on Euro Pound. I know, Sluggy. It's been a painful one to just sit and watch. Coco is the play. Yes, maybe. I don't know. Let's see. Actually, you know what? Maybe monthly RSI oversold. Monthly bullish close on the March candle. Current candle is looking like it might close bullish as well. Weekly actually is just flipped bearish, but still looks okay. Daily's in a horrible bearish trend. To be honest, I don't know anything about cocoa. I can't tell you anything about the supply and demand. I couldn't even begin to try and tell you anything about this market. But from a more long-term view, it actually might be, and this isn't financial advice, by the way, but it might be okay to like look for a sort of DCA approach, buy on dips and just let it run and expect or hope it starts going back up to these highs. Of course, don't ever trade relying on hope, but yeah, maybe there's an idea there. Euro pound could move significantly lower. I know Cycling Club, and that's why I want to get in the short position. Trust me, I'm fully aware of the potential in Euro pound. I mean, look at where my take profits set. But yeah, I mean, can't get into it. What can I do? There is actually, now I've just seen a zoomed out version or a zoomed out chart. There is quite a nice support level down here. So maybe we could move to the downside, reach this support, pull back, and then we could enter into a short position there, something along those lines. We'll see. Again, no pressure, no rush. We'll see what the market gives. Yeah, Sluggy says it right. Where is the meaningful pullback? I was expecting more hawkish split, Bitcoin bullish. I've got to say, Bull, I kind of agree with you on the bearish case. So yeah, what we have previously looked at with Bitcoin was the previous crashes. So if we look here, this was a 82.5% crash. This one was, what was that? 50, let's call it 55%. Another one here, this was around 75, 80%. And then here, this has been about 50%. So, you know, it depends. But if we take sort of the average of these, maybe we could come lower. So if we start repeating the previous crashes, it could come down to around 50, 40, maybe even 30. But again, I really need to emphasize, I don't trade Bitcoin. It's not an asset that I'm familiar with, really. I purely look at these technicals and just try and make the more extreme forecasts because I find it quite entertaining. But yeah, day to day, swing trade wise, I don't have any interest. I don't really have any ideas for you. I think the best thing at this point is to fade some good Euro news, but some poor GP news. That's the best option. Yeah, that could be a method. Cycling is using news as a leverage into the market. It's not necessarily a bad idea. Of course, you need to understand the news because you don't want to end up going short on news that's going to flip the bias. Blank off reposted the stream. Oh, I thought it said reported the stream. I was going to say, why has it been reported? Well, I appreciate the repost, and I'm sure the A1 guys do. Anyway, we've got just a couple of minutes left. So again, as I always say, if there is any final request for me to go over anything specific, let me know. If not, we can just take a quick look at the S&P, and then we can hand over to Alan. So S&P. Edge fine. I'm going to disregard my personal longer-term thesis on the S&P, and we'll just keep it basic for now. S&P 500 bullish reading with a score of 7. Great. Maybe we want to buy the S&P. So we've had a very aggressive, impulsive move to the upside. We've got a couple of things we could look at here. So either we look for a retracement back into these highs, and we could just use a very simple break, retest, look to enter on the retest, happy days. That might even bring this market towards its 200 moving average. Fine. However, there is also the other option of getting a little bit of a deeper retracement and correcting some of this left side. And we draw the fib from the low to the high on the daily. We might be able to get in on this support level at the 50% retracement. I like this a little bit more. I think it's maybe a little bit less likely because obviously we would need quite a large retracement for that to happen. But that would make me feel a bit more comfortable. So come back into the support, retest, come into the 50% retracement, also come and meet the meet the daily 200 moving average, and then we could look to buy from there. But again, I think that's maybe a little bit optimistic or pessimistic, depending on how you look at it. Thanks, great analysis. You're very welcome. That's why I come here. Gold. Well, I'm still bearish on gold. When I say bearish, I don't mean I'm shorting, but my bias is more to the short side in gold. And the reason is because we've got oil up. Well, obviously today's a little bit different because we did have yen strength, but I'm speaking more generally, not necessarily today specific. The dollar has been bolstered, obviously on war premium, Middle East situation. We've got yields that have been climbing to the upside. And then if we look at the scorecard on the Edge Finder, last time I checked anyway, gold didn't have anything. Yeah, I mean, Zero. There is literally no drivers for gold right now. And if we go off the edge finder and again resort back to yields and dollar being bolstered, there just is more of a negative for gold right now rather than a positive. So I wouldn't be looking to be a buyer just yet. I also wouldn't want to be a seller. So what I am doing with gold is just sitting on my hands. I'm waiting. If the edge finder can flip bullish, if we can get yields to calm back down, and the central banks continue on a more dovish tone across the board and developed markets, then yes, maybe we could start looking to be buyers again. But yeah, right now, I just don't have a valid reason. So the way to look at this is when you've got a trade, could you explain it to someone else and it makes sense? If not, you probably shouldn't be in the trade. Anyway, ladies and gentlemen, we have Alan Perez coming to take over the show. Don't go anywhere. Alan is a fantastic trader. You're in great hands with him. Stay safe, and I'll see you all tomorrow. Don't get margin called.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Hope you guys are having a fantastic morning, evening, or afternoon, wherever you guys are watching here in the world. As always, feel free to go ahead and drop any chart markups that you want me to go over into the chat, and I will do my absolute best to go ahead and cover that with my personal opinion. Lots of things moving on there, so definitely go ahead and drop those things. Lots of movement across, currencies. You got metals moving, you got oil moving. So definitely go ahead and drop that into the comment. We'll definitely cover the Japanese yen and my personal thoughts on that as well, as I know that's a big story here for today. So let's go ahead and get started. Sluggy, my friend, how are you today? Simo, how are you, man? I am watching a couple things. So I did take some trades. I took Aussie, which one was it? Aussie Swiss here. I took this trade here. We got pulled back into support. I am in Aussie CAD, which Aussie CAD yesterday, guys. I got into that trade and it started to immediately go against me. And I thought I was going to get stopped out. Like it just went straight line down. It has now recovered some. So I am, slowly building a position into the Aussie basket. My stop losses on these trades are one, they're pretty tight. So I'm waiting for ultimately a bigger discount would be favorable in my opinion. So if I were to get stopped out in Aussie CAD or Aussie Swiss, for example, I like these lower levels here where I can build a bigger position. But for now, I'm taking a stab at pullbacks as I do think that there is some divergence in central banks. And I do think that the Australian economy has some ways to go. And so that's why I'm in this position. So Aussie CAD is now in the green. Aussie Swiss is also in the green as well. Euro pound is now working out here a little bit here. Again, this is a short-term trade. Ideally, I am out of this trade pretty soon. This one was pretty nice, effectively no drawdown, but I got into this trade here on this recent pop, and we are now starting getting to that level of support there. So I'll take my profits once we get here. Euro pound is one of those currencies that just mean reverts and trades sideways. So the longer I hold this, the less of an advantage that I have. So again, looking to take profits here very shortly here. Hopefully that happens today. And so let's go ahead and talk about the Japanese yen, right? That's the big story here today. Let's look at the currency strength chart to see if it's coming down a little bit. So we did have a big monster run up here, and we are now reverting some of that. But, the direction, whether there's follow through or not, I don't know. I'm not going to make that call. I'm not gonna try and say like I know something, but what I can do is share my personal thoughts and opinions on what this is, right? A lot of people are speculating that it is an intervention, and I think it's more of a synthetic intervention. So early this morning, right before I got on here, I posted some 2 chart markups, and one of them was over the Bank of Japan with the yen. Essentially, what happened was you had finance minister, I think it's called Mimura. She's one of the Japan's top officials. She said this last night. She said, "Let me say this as my final advisory if you want to escape." So she was basically hinting that any speculative leverage shorts there at the yen, go ahead and get out now. And the markets really took that as a verbal intervention. And also too, I have some notes here in front of me. Which one was it? Katayama said that they are prepared to intervene at any time and that the yen weakness is affecting livelihoods. So it's definitely a top priority for them to go ahead and get that exchange rate under control. And so I see a lot of parallels from January of this year, right? We did have some kind of a verbal intervention as well earlier in the year. Bank of Japan said, "Hey, you were getting close to that 160 handle. We're looking to intervene if necessary." And then they went ahead and coordinated with the US, with the Federal Reserve, a rate check. And so that alone went ahead and sent the market lower, down about 500 pips here. So I'm seeing that parallel as well, where they're doing a verbal intervention, essentially buying time, right? Because the actual intervention is actually quite costly. Japan has to sell US dollar reserves and buy, yen on the open market, and that can be costly. So this is a way for them to essentially get a little bit of control of the price by instilling some fear into the market, and having essentially a free intervention. Now, this doesn't change the overall fundamentals, the dynamic of dollar yen, right? There is a chance that you do have some dip buyers here because the rate differential is still in play, right? The rates haven't really moved much. The Fed is still at 3.5, 3.75, and the Bank of Japan is still at 0.75. So that's still going to naturally cause this chart here to drift higher. The question really is do dip buyers come in right here at 156.7, where we're at right now, or that 200-day moving average near 154? I would say if you're not in the trade, don't get in the trade. Things can go either way. I would rather wait for a true confirmation that there was some type of intervention. And whenever that does come, you do have some follow through for a couple of days. So you can actually ride that trend. But for now, things can go either way. So that's my thought process there with dollar yen. A synthetic intervention, which is just them buying time and getting the price under control without having to actually commit that costly transaction for an actual intervention. Okay, awesome, cool. Let's go ahead and look at the comments here. Hey Max, Aussie CAD looking good. Might miss it. No man, no worries. We were talking privately, Max, and I completely agree with your thought process there. So it is just part of the game there. But ideally, Max, I know you're looking for more of a discount here in Aussie CAD. I would also look for a discount in Aussie CAD. So I think that could be a win-win situation. But for now, the trade's working out quite well. Aussie Swiss looks great. Yeah, let's go ahead and look at Aussie Swiss. So the Swiss basket as a whole is actually getting quite a bid there as well. So you have dollar Swiss here down 1% on the day, and the other ones are taking a little bit of a hit there. So let's go ahead and see Aussie Swiss, because I do think that it is a good trade there. So essentially with the Aussie basket, guys, if you can kind of catch where I'm going here, you get a pullback into support. I bought that one. Aussie CAD, we got a pullback into support. I bought that one. I'm ultimately looking to do that across the Aussie basket here. Aussie Kiwi is still up there elevated, but I'm waiting for a deeper pullback into some support so I can ultimately buy it and build a nice Aussie basket long. This is how I'm doing it kind of safely here. But let's look at the edge finder here. And by the way, before I go into it, guys, this is the tool that I use for my fundamental analysis and my, directional calls and everything trading related. This helps me a ton. And so today is the last day of the 45% off sale, the anniversary sale that they do once a year. It is the lowest sale of the year. So I highly recommend you guys get yourself a copy of the Edge Finder. I promise you it will do you wonders. But let's go ahead and look at here. You can see that the Aussie basket is consistently higher here. Aussie Swiss getting a very bullish reading of 14. It is the highest score out of everything. So that's why I truly like this trade here that I just took. I think it's a good one. Aussie dollar isolated. So Aussie futures getting a bullish reading of 8 here. You have Aussie US dollar getting a bullish reading of 6. Aussie yen's getting a bullish reading. And I believe you had Aussie CAD getting a bullish reading as well before, although I can't really quite spot it, but it could be my eyes just not working well. But nonetheless, Aussie is doing a really, really good there. So building that position there, that's pretty much what I'm looking at. I do also have my Euro Pound position again. It seems to be kind of moving here today, so I'll probably get taken out for a profit here shortly. As far as other directional calls go, it's a little bit tricky, I would say, because in my opinion, you had a neutral to hawkish Fed yesterday. Yet you have the dollar down and you have equities higher, which is a little bit weird, right? Usually the correlations don't work all the way, so that's why I'm kind of mixing in with the minors here. But ideally, we got a hawkish Fed. I was looking to go Kiwi dollar, right? That was going to be my game plan, or short the euro, for example. But that's not the case, right? These things are up on the day, and so that kind of makes it a little bit tricky there. But we'll go ahead and see how things play out. We do have some financial data coming out here for the U.S. So this morning we had jobless claims, which was good, which should have supported the dollar. GDP, if I'm not mistaken, is a little bit mixed there. Not the best, not the worst. 2%. Yeah, so GDP was kind of mixed there. And then we do have, is today Thursday? Or what's today? Today's Thursday? I thought we had NFP this week. I'm tripping. That's next week because it's the first Friday. Okay, but we do have S&P manufacturing PMIs and ISM manufacturing PMIs tomorrow, so we'll see. But nonetheless, though, we did get a neutral hawkish Fed, in my opinion, yesterday, and we have a dollar that's red on the day, so a little bit tricky there as far as my directional call. Let's see, Alan. There was some financial juice message that it was confirmed intervention. Oh, really, Max? Really? Okay. Let's we'll have Marco here. When Marco joins out, he's really good at finding that. One thing that I will say here is that I just see on my terminal on Financial Juice, Trump floats a new plan to reopen the Strait of Hormuz. Now, this is one of those things where, the more you say something and nothing happens, the more diluted the message becomes. So we'll see how that happens, how that comes out. But we have oil here trading lower today, which is going to be benefiting that rate cut story, that inflation story. Yields are lower, so 2-year yield lower here, and the 10-year yield also low on the day. And stock market's being supported by this, so we'll see. I'd like to get a good consensus in the chat. So it seems like the stock market is beating most odds. You have a neutral hawkish Fed. You have strong earnings, right? And then you have, the war in Iran, you have inflation, you have oil elevated, yet it's still high. So my question to you guys, is this just going to be the new standard where the bar is pretty high and the stock market's pretty strong and you can trade the market at these highs? Or are you guys being cautious? So if you guys are willing to trade the market here at the highs, go ahead and type 1 in the chat. And if you're still proceeding with caution with equities, go ahead and type 2 on the chat. And while you do that, Sluggy says, check 1524 news. Okay, on Financial Juice. Let's go ahead and see. If you guys can give me some keywords as well, that would be helpful. But let's see, 1524. I don't see much, guys. 2. Okay, you guys are being cautious there at the highs. 1524. Is there any okay, this was in the morning time. Some ECB probabilities. Oh, timing is different. Well, it should have been last night, right? The MOF said Japan didn't intervene in the FX market in April. If you guys got some keywords or something like that, feel free to drop that in the chat. That way I can just search for it. I don't want to spend too much time there, but we can definitely get to that. Marco's really good at helping me with that as well. So we'll see. I'm sure he will have the latest on that. But so as far as like trading goes, trading the miners at the moment, right? I like to trade the majors. Like if I could get a position on Aussie US dollar, it's getting a bullish rating, I would like to do so. But yeah, Marco, how's it going, man?
Hello. Some big developments today.
Oh yeah.
So UJ dropping out of the sky, and we have also actually UJ. I mean, that's kind of the main focus. So the yen. What's your take on that?
Yeah, man, I'm floating about $80,000 on the demo account that we talked about yesterday.
Awesome.
Kind of shot myself in the foot there. No, but yeah, in my personal opinion, I think that this is more of, and this is a smart way to go about it. This is a synthetic intervention. Now, the chat here is telling me that there was some actual intervention confirmation with Financial Juice. I tried looking for it on my side, but I couldn't find it. But if that's the case, I'm completely wrong here. But I think it's also probable that Japan did similar to what they did early in January of this year, which was a what I call a synthetic intervention, where they verbalize their intention, spooks the market, and then the market goes lower, and that just buys them time. And that's a way for them to control the exchange rate without having to actually commit the money to actually intervene, right? So that's kind of my quick highlight there on what's going on in Japan. How about you, though?
Well, I'm seeing it, and I read Brent Donnelly's latest newsletter. He also confirms it as an intervention.
Okay.
So it looks like it could be the real deal. I mean, you can never be for sure, but there's a good chance it's an intervention, and there's a good chance that it can actually follow through. So let me just remove this.
So I know the way they confirm these things is the next business day after they get like the flow data, and they can actually confirm abnormal activity. But if it's a real intervention, then this thing has some follow through.
Yeah, it definitely could have some follow through. If I put up my screen here, so let me do that. Like the one in 2024 really had some nice follow through. So the initial candle looked pretty much exactly like this one, and then we had the follow through in the upcoming few days with even more interventions happening, and we had an absolutely massive drop. So if this is just the start, it could make sense to get in on a bit of a rally if we do get a rally to the upside. So it's definitely too late to play the initial intervention, but if there's going to be follow through, placing a bet, placing a sell position could be sort of an interesting way to go. But I think this was translated pretty much on everything connected with the yen, which does also confirm an intervention and not just being connected with the dollar. So yeah, even Swiss yen massively dropping. So I would say that's another clue that it could be an actual intervention. Are you looking to play it possibly to sell rallies on UJ, or are you just gonna be patient?
Yeah, so I had a limit order on UJ, and it got triggered, so I'm actually in the trade. I can't find any this Reuters right now. It's kind of like it has a paywall as far as confirmation. There's a couple things. I'm trailing aggressively here. But if it's a real intervention, then my kind of playbook a little bit changes a little bit. It's a very small position, so it's really not affecting me much. But ideally, if you do get a pop or anything like that, any structure, like my eyes take me here to the 4-hour time frame, so 157.5. This was a strong floor as support there. So if you were to get a rally back into here and then trade it lower, then I would be essentially trading stops with structure. But this thing, if the intervention does come out confirmed, which I know the chat here is saying that, then this thing can really start to move in a straight line.
Oh, so you're in?
Yeah.
Oh, okay. Awesome. Did you get in before or like recently in the last few hours?
Well, I had a limit order that got triggered there.
Okay,
yeah,
cool.
it's kind of like you know how people they like you see memes on the social media where they have they're trading like these news events like CPI, and they put a limit order, one up, one below, and one of them's gonna get hit. I should have said he did that for the downside. So yeah, it's kind
So you
of
had a sell stop.
yeah.
Awesome. Yeah, personally, I kind of chickened out. I talked about getting in on a sell yesterday.
Did you taco? You tacoed out?
Yeah, I tacoed out. So the confidence wasn't there, and I just didn't have enough sort of confluences to go in. And most of the sort of online chatter from the people that I'm following was kind of, we're not sure if there's going to be an intervention or not. So decided against it. Was the wrong move, but part of the game, is just one trade. And in a year, we'll take 100 trades or 150. But again, possibly selling a rally could be a good idea from what I just showed on the 2024 July data, where it absolutely went down even more, dropped like a rock. That could be nice.
Yeah. Yeah, I actually like, despite being in the trade, I kind of want to be neutral there just because I don't know if it's confirmed or not, right? And so these things, if you do find buyers there, you can get some kind of a V-shaped recovery quite fast, in fact. Um, but if this thing does become real, I'm really interested in Swiss yen. I think that, we were late, or yeah, we were early last time. I took a loss on
Yeah.
that one. But
Mhm.
definitely Swiss yen. I think if you do get some momentum to the upside there in the yen, I think Swiss yen really kind of leads the path there, especially because of those positive swaps. So as far as structure goes, man, I guess I would say, which we kind of got close to it, but I'm just like linking like this is probably support here. You have this upward trend line or these moving averages. If you were to get a decisive close here below, then you can, take that further down. But the only thing here too, the caveat is that the Swiss basket right now, although it doesn't really show here on currency strength because the yen is obviously leading the way, but the Swiss franc's actually quite strong today as well. So I don't know if that will be overridden or this will be not the best way to go about it.
Yeah. Interesting. At least we're getting some moves. And also, we got the Mag 7 yesterday, or I think Apple is today, but we got like 3 or 4 companies yesterday. I think all of them produced a beat in the earnings. The price action was mixed. Some of them went up, some of them sold off. I think Meta didn't really have a great day yesterday. So let's just take a look. Yeah, Meta definitely sold off. MSFT
I think it was like 9%.
sold off as well.
Um,
Yeah, I think it was because Zuck, the Lizard King, announced massive capex, massive capex spending, and people didn't like that. So essentially, Meta sold off heavily, but the earnings were still a beat. And we're gonna get Apple today. I think Nasdaq is holding up okay. Well, not anymore, but it was at all-time highs when I checked the chart. So that's a good story for equities. What do you think? Or is it more of a sell the news type of scenario where everyone was getting hyped up for the earnings? Earnings came out, time to sell.
yeah, it wasn't like the most rockstar earnings, right? Like all of them beat, and it's like this big thing. So I think it's kind of like the second option there. I think you just get some good pullback opportunities. What's kind of tricky for me, Marco, right now is like, if you are getting a super strong yen and an intervention, why are risk assets still like green on the day? Why is the Aussie dollar up? Why is the Kiwi dollar up? Why is equities up? Usually that kind of signals like a little bit of an unwind, a leverage unwind. Yet markets are still elevated. So that's like, I don't know, man. And then you had a neutral to hawkish Fed yesterday, right? And then you have oil high in the hundreds, and then you have yields elevated as well. Like, what is propping up this market? That's my question. And like, is the fall going to be just as hard as the rise?
Yeah, I mean, I would like to get a fall in equities to get a pullback, a correction. But what you said, like the Nikkei, it should sell off. If this is an actual intervention, the Nikkei shouldn't be up on the day. And it's actually up, I think, 1.33%. So if we go to July of 2024, July 2024, so that was the time of the intervention, and the Nikkei took a big hit, really big hit there. So is this going to be a big one? Maybe not. Maybe it's just a small intervention, or there still could be the case that it's not an intervention, that it's how did you call it, a synthetic intervention?
Yeah, just like a synthetic verbal intervention where they achieve their objective temporarily by just spooking the market a little bit.
That's interesting. Yeah. We're gonna get more clarity as the days progress, for sure. What's your take on central banks? We had 5 meetings, or I think all of them are finished now. We had the Bank of England today and the ECB. Did you get more clarity? Did you get any positions that you're looking at, maybe to play some currencies to add on some more trades?
So to be quite honest with you, Marco, after the Fed yesterday, I was quite busy doing some last minute packing and stuff. I know we had central banks this morning. Didn't really get much. I didn't really look much into it, to be honest with you. But I did see a headline there that ECB is pricing in some hikes. So Lagarde, okay, so Lagarde here an hour ago, give or take, we're shifting from the baseline. This is essentially what I do. Money markets are now expecting 72 bips of hike this year versus 76. So I guess it's kind of baseline to a little bit neutral, I guess. Not the biggest change in the world. Okay, so money markets trim bets on a June ECB rate hike. So it seems like they were more neutral to dovish.
Yeah.
Which that would be my quick take, my quick rundown there on the ECB. Now for the UK, not too sure there. Did you get? I'm gonna ask you. Did you get any good view on central banks and how they were positioned?
Overall, no. I would say Lagarde is sort of the most boring speaker out of all of them. She comes on, she flexes with the scarves, and that's about it. But essentially, most of them are staying neutral and kind of in the wait and see mode, depending on what happens in the Middle East, depending on if oil brings inflation or if it brings lower growth. So they're not sure how to balance the upcoming inflation and how upcoming oil prices or higher oil prices impact the growth later on, which is not so great for us Forex traders. We would much rather see the central bankers actually commit on a specific path. And all of these small repricing events, I mean, if we just look at the charts never lie, and they barely moved. So like Euro dollar, GU dollar in general, I think, UJ moved, but that's a different thing. That's a different catalyst. So as far as Forex goes, in currencies, tough market. Still a tough market. We didn't really get the sort of the catalyst that I was personally waiting for this week.
Yeah. I'm thankful that I got the pullbacks in the Aussie basket, because if it wasn't for these minor pairs, I really would be flat, because usually the way I trade is my idea is, okay, it's kind of vanilla, right? Fundamentals plus central bank, are they aligned? Cool, one direction. In this case, dollars US is doing quite well. You had a somewhat neutral to hawkish Fed, and the dollar's red on the day. So that's, to me, that's like, okay, something's different here. So that's kind of like the only way I'm participating here is Aussie CAD higher, Aussie Swiss long side as well, and then Euro pound here. It's dropping today. But yeah.
Oh, awesome. So Euro pound working out pretty well as far as I can see.
It was quite slow for like the first. When did I get filled in? I got in on like one of these pops. Yeah, I think it was this one. And it was kind of just range bound for some time, and then today it's dropping a little bit.
Mm-hmm. My Chat GPT bot actually sold Euro pound today as well. So
oh, nice. There you go.
Let me just check. I think I have it on my DNA account. Yeah, sold Euro GBP and running a little bit of profit, so that's fine. And bought gold, but that's not working so well. Just thought that was interesting to mention.
You should consider, this is unsolicited advice, but you should consider maybe Claude. From my experience, like Claude is very bigger into like deep research and stuff. I wonder if the results would be slightly better or worse with something like Claude.
Yeah, I got a couple of recommendations to try out Claude. I think it's actually a great sort of thing to try out. But for me, it's a case of, if it ain't broke, don't fix it. And at the moment, seems to be working okay. If it breaks, I'll try Claude, or I could just run Claude in the background. So I should definitely do that. I should run Claude with another prop account and then compare how both do. Compare ChatGPT to Claude. I did try Grok, didn't work. It went into like 11 or 12% drawdown almost immediately. So that didn't work out. But Claude, I absolutely agree. If you guys, the viewers, are looking to research anything, like Claude is much better than ChatGPT. I've had a much better experience.
I can respect that. If it ain't broke, don't fix it. Sluggy says try Mythos. I don't think it's out yet. I know it was leaked to like a handful of people. Sluggy, if that is you, if you're one of those people, we can set up an arrangement to where I can use it, because I heard that it is very overpowered. That Mythos.
I didn't hear of that. What's that?
Sluggy, correct me if I'm wrong here. Mythos was leaked out, and it started like going into databases and like hacking things on its own and stuff like that. It's very, very powerful, and so Claude had to take it off the shelf.
Okay, interesting. Yeah, that's like the new game changer. Artificial intelligence. It's like I don't know, the .com revolution or the Excel revolution, because Excel was a crazy tool when it was first
Oh yeah.
introduced. I think it absolutely was. So if you're not using AI as a trader, I think in a couple of years you'll just be nowhere. So you need to start implementing AI as fast as you can.
It's like I was watching this was some time ago. I was watching a documentary about these guys based in Chicago that were trading on the exchange, and they were used to trading in the pits. That was the way to go. Hand signals, all that
Yep.
good stuff. And a lot of the older people that were trading in the pits really did not like when people were trading on the computers from home. They were like, no, it's got to be on the pits. This is how you do it. And those people were left behind. And ultimately, the ones that adapted the computer early on ended up doing really well for themselves.
Yeah, the old timers just couldn't manage staring at the screen all day. It was just too unfamiliar. But I get it. I understand. But as a trader, if you're not evolving, you're dying. So yeah,
For
I think
sure.
the
Well,
saying is adapt or die, something like
adapt or die. Yep.
that.
Survival of the fittest.
I mean, it's a competition. So yeah.
It is. It is most definitely. Well, Marco, I will go ahead and allow you to do. Are you doing a DNA Funded challenge today?
Unfortunately, I don't have any more codes for April, but we're gonna get them for May. So we're gonna be back at the wheel of names and doing the giveaway in May.
Okay, cool. Let me ask you one more question here before I head out.
Yep, sure.
Bitcoin's doing quite well. Again, one of the things
Mhm.
that's confusing here, one of those risk assets where if you were to get a rising yen, some kind of an unwind, Bitcoin would actually fall from that, right? But today
Yep.
it's up almost 1% on the day. Congratulations on your Bitcoin trade. What
Thank
what are
you.
your thoughts here? Maybe we can give some value here to the viewers when it comes to navigating crypto.
Absolutely, absolutely. So for Bitcoin, I do have a buy position on. My stop loss is huge, which has been brought to my attention in the A1 Discord. So now they call I win the yen man or the yen master, and I am the big stop loss man. So that's
Oh goodness.
that's the
So
new nickname.
I did see a comment of that in the chat, but I didn't know what they were referring to. So I'm definitely gonna look up today when I have some free time and see what they were roasting you about.
Yeah, sure. I mean, for me personally, with the take profit that I'm looking at, the stop loss works. So I chose this swing low to put the stop loss. But yes, Bitcoin is up on the day by I don't know 1%, and I'm barely up on the position. So I get the whole thing about it. The main goal, the long-term goal, is to aim for 90 something. So if this is an actual breakout, and that's what I'm playing, I'm not playing just a quick push to the upside. I'm playing sort of a breakout out of the range. And if we do breakout, I could take profit around this high, 95, 97, and that creates a pretty positive reward to risk. So for me, following the Nasdaq, maybe sort of kind of Bitcoin could be late to the party. Nasdaq already had the explosion. Now it's time for Bitcoin. The US economy seems pretty resilient. I mean, the data coming out of the US seems pretty strong, so people could have some extra cash to park it into Bitcoin. The problem would be if we get the yen unwind. So if we get a continued intervention and a real intervention, that could be a problem for risk on assets, and it could bring my Bitcoin lower. So that's the risk. But Edgefinder is bullish. I think it's still bullish. Should be still bullish. So that's the general bet.
Awesome. Well, it's definitely a good play. And it seems like, you address the risk, which is if you were to get a yen intervention, this trade can hurt a little bit, but it seems like for now it's kind of holding up quite nicely there. So hopefully
Yep.
that continues and it's one of those trades where it works out well. But all right, Marco, I'm gonna go ahead and head out here. Thank you for that, and we'll talk soon.
No worries. Have a safe trip. Will you be streaming from Dubrovnik?
No.
Okay, cool. Well, have a safe trip. Have fun, and we will see each other soon.
All right, man. See ya. Cheers.
Yep. Goodbye. So let's continue with the stream. I do want to mention, if you guys are looking to get funded, definitely do check out DNA Funded. So this is my 25K two-phase funded account, it's down. I'm down around 4% or a bit less, I think, a bit less with the current equity. So I have a sell on Euro GBP. I have a buy on gold against the Euro. Is gold still up on the day? Gold against the dollar is up, but gold against the Euro is probably down. Let's see. Okay. Anyway, so this is my personal account, past phase 1, past phase 2, time for the funded stage, aiming to get a payout. But if you want to get funded with DNA funded, you can use the code A1 Live to get 25% off any DNA funded challenge. Okay, so A1 Live, 25% off. Check it out. On the watch list, I have the Bitcoin position. This was a signal in the A1 Discord. So if you're interested, take a look at the link below. Join the Discord. You can also use the code Marco to get 25% off. So I have codes for everything you need, except for TradingView subscriptions. Or do I have one for TradingView? I'm not sure. Anyway, Bitcoin, I'm in a position. Nikkei, I would love to get in on a buy trade on the Nikkei. Now the risk is if we get an actual intervention, or if this is an actual intervention and it has follow through, Nikkei could suffer a bit. So if we bring the price back to 2024, right here, July, this was when we had the intervention, the last big intervention. Nikkei definitely suffered. That's the risk of buying the Nikkei at the moment. So not sure anymore if I want to get in. I'm going to have to think about it. And then USD JPY, I didn't get in on a sell. Unfortunately, chickened out. So didn't have enough confidence to get in. For me, in my plan, if I don't have enough confidence, if it feels like I'm forcing a position, then I'm not going to take it. So stay out of this one, but it's just one trade. So in a year, I usually take 100 to 150 positions. One trade is not really going to make or break the whole year. Yes, this could have been a nice runner, but hey, you miss some, you lose some, you win some. That's how it goes. So UJ, what's the game plan here, you may ask? I don't know, maybe sell a rally. If this is an actual, if this is going to be a continued intervention, maybe selling a rally could be the smart thing to do. It would be also a good hedge against my Bitcoin long, against any risk on play that you may have. If I decide to take the Nikkei, then maybe selling UJ could be a good sort of hedge against that. Gonna have to think about that. Stocks are up today, which is good to see, except Nasdaq. It had some pretty nice gains. Again, the Mag 7 earnings were fine. I know Meta sold off, but that didn't have much to do with earnings. That was mostly with the Lizard King announcing massive CapEx spending, which the market didn't like. Dow looks great. Russell looks fine. DAX, I don't want to even look at the DAX. The DAX is pretty much staying in this range and not moving anywhere. Metals, up on the day. Have they really cleared this break-even price action, this range-bound price action? No. I'm still not interested. Let me just check the Edge Finder. So if we look at the gold, neutral, yeah, I can't do much. I first need to see this price go above 20, the 20 MA. Then I need Edge Finder to turn bullish. Then I could maybe consider a buy setup. Personally, I do think gold finishes the year near the all-time highs. So I do think we go up by the end of the year. Most of the people that I'm following and watching believe the same. So they have a bullish bet on gold. But I don't want to buy at the moment. I don't think this is such a good level to buy. Just my take. Oil pushed lower a bit. So we had a crazy run up this week from Monday. Really good run up. Now pulling back a little bit, I think the new cover of The Economist, if you are following the magazine called The Economist, the new cover is essentially price of oil and signaling that oil goes higher. Now, a great contrarian indicator are magazines, basically. So The Economist is a great contrarian indicator. If they post a specific cover that tells you bullish or bearish on a specific asset, usually the completely opposite thing happens. So they posted yesterday or today the cover with oil being too low, signaling that oil is too low and that it's going to go up. That's a great contrarian indicator to actually sell oil. Now, I'm not going to execute that position because I don't have a lot of confluences to do it. Kind of the only confluence is The Economist cover. But we could see a bit of a sell-off here. I don't know. The situation does seem to be heating up a bit in the Middle East. So we had something from Trump. We had the Ford carrier going home, which is okay. Trump would consider military action. Trump rejects Iran's offer. Blockade stays. Again, I'm not a geopolitics expert. My edge here is pretty small, and we're going to have to wait and see what happens. So I'm not touching oil. Comments. Let's see the comments. Can you please do DXY? Sure, we can do DXY. NVIDIA. What do I think of NVIDIA? Let's take a look. Whoa. So, well, this is pretty bad. I think did NVIDIA have earnings? Not sure. Gonna have to look into that. I know it's Apple, Microsoft, Meta, and a couple of other companies. Amazon, I think Amazon as well. NVIDIA, maybe not this week. Personally, I would be bullish long term. I think this is one of the great companies in the US. Definitely correlated with artificial intelligence. Again, you need GPU power. You need pretty much any kind of power that you can get your hands on to run the AI stuff. And NVIDIA is one of the major players in the game. So yeah, fundamentals right now, I would say, are super bullish. GP Swiss. Joshua, good afternoon. It's the Zuck. Yes, it is. It is the Zuck. Everyone fears the SEC, as they should. Economist contrarian signal. It's like the rich dad, poor dad guy. FJ said Trump wants to open the strait. I know, but to be honest, I just completely ignore whatever is coming from Trump, because 95% of it doesn't have any real weight, and 95% of it is just noise, and it's getting super annoying. So I just tend to ignore all of that stuff. I'm long gold. Okay, personally, I wouldn't be long on gold, but that's just me. I climbed into BTC longs with you, Marco. Nice. Swiss yen is still a good sell at 200. Imagine SMB selling Swiss now. Let's see. CHFJPY. Well, I did have a position on. Got stopped out of it, unfortunately. We did, Alan and I kind of called the price ceiling, but we were not willing to participate after we got stopped out. Just the way I trade personally, I don't want to re-enter a position I got stopped out on unless I have crazy good conviction. Would I jump on a short right here? No. Personally, I would not. It would be kind of smart for the SMB to jump in the market and do an intervention. But again, Swiss yen is not a worry they have. They're looking at Euro Swiss. They're looking at this. They're looking at the 0.9 level, most likely. Swiss yen doesn't really matter. Euro Swiss matters. We are now far above the 0.9 level. So unless we can go back near that, I don't want to play anything with the Swiss as far as the intervention goes. UJ, as I mentioned, maybe selling rallies. Selling rallies could be interesting. That could be a good game plan. Okay, that's about it from me. Yeah, let's see. Final comment. Marco, would you consider a short on orange juice with the way the weather has been going? Absolutely. So let's wrap it up here. Thank you guys very much for watching. Don't go anywhere because you have Tiger coming on after me. If you want to get funded, I'm just going to repeat the code. A1 Live gets you 25% off any DNA funded challenge. So check it out if you want. I will not be streaming tomorrow. You can catch me next week. I wish you good luck in the markets. And that's about it. Goodbye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Happy Thursday. Happy Thursday. Just because, hey, every day we wake up, we take a look at the newspaper, we go to the obituary section. If our name ain't there, it's a good day. Good day by default. Thought I'd throw that out there for you. So context, perspective, guys. How you doing? Let me know what tickers you guys want to check out. James, the ghost of James Pierpont Morgan, decided to come out of his grave with his dusty cash. He gave me a few bucks today. I did get a winner on JPM, ticker JPM. So that trade is finally closed out. I think it was about $600, guys. I didn't do like a major risk on that. Pretty small. Actually, I think it was a 0.3, but I was only trying to take price just to the next minor zone. So we can definitely take a quick peek at that. And then still in that Netflix trade. I don't know how, guys. I'm living on the edge with that. It came down within a few points of my stop loss. Totally reversed. Not out of the woods yet, but still in that sucker. So, yeah, you can see where we had that turning point right above my supply zone. So at this point, hey, we've made a little bit of higher highs and higher lows if we're just looking at Tuesday morning as the bottoming out point. So we'll see. We'll see. I'll just let it do its thing. But yeah, JPM, I just basically took this trade off of this 15-minute zone of demand over here, guys. Dropped into it. Yeah. Let's see here. Wednesday, that would have been the market open. I waited for that first 15, 20 minutes to kind of shuffle itself out and waited for that retracement down, bought in on the zone of demand. So this was that second chance opportunity. Pushed up, bounced into this little tiny zone of demand, pushed back down, a little deeper into the demand zone. And then, of course, market opens today. We got to push up. So I ended up taking my profits right about here. Again, guys, I don't want to get too greedy on this stuff, especially with all the volatility we could be seeing from all these rate statements. So thank you, JPM. You may now go back, take a sleep. take a nap and pay me again here in the future. So let's take a look here. What's good, Ray Beast? Check pound New Zealand. Yeah, absolutely. Absolutely. Let's go have a look at pound Kiwi. Still giving us a very bullish plus 10. I just want to make sure my chart's moving over here to you guys. I think we are. Okay, perfect. So yeah, pound New Zealand. Let's go upstairs to the currency pairs I got right here. So nice bullish score. Let's start with the daily on the right. Okay, my 8 is above my 21 EMA. That's the dark red above the light red. So there's a good look to that. Looks like the alligator's mouth is kind of opening up. Let's see here. What does that look like? Okay. Just wanted to zoom in a little bit. Okay. So the top, yeah, we're getting a little bit of an up push. So I like that. The important thing with pound Kiwi is, and I think I talked about this yesterday, we were still down here in that congestion area I told you guys about. I think I might have even referred to it as a puke fest. So the good thing is, looks like we're pulling out of that. So let's go have a look over here on an action time frame and see what we got. Okay, so yeah, I did draw up this zone of demand down here at the bottom. Was that a 2 hour or 1 hour? It looks like it was a 1 hour. Talking about this zone down here. The only thing I was just a little hesitant about was the fact that we had a lot of candles to the left, but a chunk of those, a lot of those were in the Asian market. So not really too worried about that. I'm basically going to take these Asian candles, probably just ignore them because there was like little to no trading activity down here. So at the end of the day, that is a swing low. So swing low, swing high. Give me a simple retracement. We did break through the rest of this daily supply, which I would argue is probably a minor one. I think I have it drawn up over here. Let's go have a look. Yeah, this was that. I don't even want to qualify that as a supply zone, really, because we didn't even have a gap. Yeah, so I take that back. Because this candle here came back and touched the zone candle itself, yeah, I'm going to delete that. So that to me was not, I drew that in anticipation that we were going to probably stay down here at the close of the next candle. But of course, we did get that retracement back to the upside and then had a really nice expanded range candle on the daily chart from yesterday. So yeah, at this point, I'm looking for a discount. Now the discount is, of course, a little deeper down here. Let's see. Let's go to a 4 hour because I want to go check the 4 hour again real quick. Zoom in on the left. So we have a former support resistance line, which is that blue line going through this particular area. But the thing is, I would still stick with the zone at the bottom, this 1 hour, because it's closest to the origin of this overall up move. So in general, guys, of course, it depends on the context every time, fundamentals, edge finder, yes, no. It just depends, but I prefer to wait on a retracement to the origin of this strong move up. So that would be where I would remain interested into basically the 2.29 round number. Okay. Yeah. And then from there, because we had a little bit of a gap. This wasn't like the strongest gap on a 1 hour, but a little bit of a gap right here. Okay. Now that gap has been kind of closed on this particular time frame, but again, we're looking on a 1 hour chart because that's where we drew up the zone. So here's how the gap would look on a 1 hour chart. Let's see here. So basically like this. Again, it's not a major gap, but it is a gap. So it does show that we have a little bit of inefficiency in the market right here. And that just basically means demand heavily exceeded supply, left the gap. Now, if you're a gap trader, congrats. That's, I think, the second one this week I've mentioned where it actually would have been a decent win on the gaps. But I don't trade gaps. We joke about the gaps on the show, guys. We joke for a reason. It's just stuff you see all over YouTube, fair value gap strategies, reverse fair value gap, or whatever the heck it is. I don't even know. I've dug into it a little bit in my younger or earlier in the career just to see what the heck everybody was talking about. But the more I studied supply and demand and understood, how demand exceeds supply, vice versa, and how powerful those are, that's where I just focused 100% on supply and demand. So anyway, 1 hour chart, I'm interested in that spot. So that's 2.28 or 2.29 basically, guys. So that would be the level for you on pound Kiwi. As always, not a signal service on my behalf. Just showing you the zones I'd be interested in looking at if I put money on it. So that is pound Kiwi. Well, let me look over here at my cheat sheet. The intervention. What do you guys think? Did we get a little bit of intervention this morning? Had 300-400 pip drops on a lot of these yen pairs. So at this point, the only thing I'm really interested in on the yen pairs is, well, it's the Aussie yen longs. Yeah, so I want to take a look at these. I haven't looked at these in the last hour. So Aussie yen, let's have a look at that, because that was the one item I was kind of interested in. Now you're going to see real quick that when this intervention activity came out, it chewed through a whole bunch of zones. And this is understandable and expected. So this zone, actually, I guess that is the last one I drew up over here. It actually worked out. Okay, let's do this. Go to one chart. Look. So this was the last zone I drew up. Looks like we did get a little bit of a bounce from there, push back up. But then, yeah, that intervention activity took place. I think it would have been around, well, basically about while I was asleep drooling on my pillow, let's put it that way. But at the end of the day, Aussie yen, let's see here. I don't think I really had a good zone. That was really the only one. Okay, yeah, much deeper down, but we may not get down there. Let me zoom into a daily real quick. And 1, 2, 3 candles. Yeah, I don't know. I don't think I really like this now that I look a little deeper. The only ones I was really interested in was those higher up zones. But again, we've already, that was yesterday material there. So just kind of doing a little bit of a review here. We had this 1 hour zone. I guess it would have been right here. So that was a zone that kind of gave us a little bit of a boost up, flirted with supply. And this is after the main supply had already been touched. So this zone worked out. This zone, the less probability, because it's right there. It's basically created from a bounce on another zone. Remember, I like zones created on their own. But even so, we still got just a little bit of a push back up, right back to that same supply zone, fell back down. And then I think the last resort on a second chance opportunity was, yeah, right here, looking on a 5-minute chart, guys. A 5-minute chart where we did have this zone here. Price just barely kind of broke ahead of this choppy supply zone, I guess, but it did wick through it. So we got to drop down to that. Got unfilled orders. You can see the VSA picks up where the zone is, and then we get a push back up, and it just the whole thing repeated. Bounced right here at this supply zone here, got the push down, or basically flirted with it. So that's just a recap of Aussie yen. That's the only thing I was interested in, but again, all that's old news. This completely resets everything. All the yen pairs are basically reset in my opinion. So I'm curious, what about dollar yen? Did we finally get that bounce this morning? Yeah, so here you go, guys. Okay, remember, interventions do not care about supply and demand zones. Not any of the minor ones. Not any of them within 300 to 500 pips or more. So really the next stop for dollar yen, even though I think it's off our list now, it's really going to be this daily 4 hour down below. And you'll see this, guys, when we're talking intervention, you'll see where it'll drop 300, 400, 500 pips, might pause for a little bit, and then turn around and drop another 300, 400, 500 pips. So just because it's balanced out or, kind of based out over the last couple, few hours doesn't mean it's done. Doesn't mean it's done at all. This thing can turn right around and just chew through all the rest of this zone. Okay. Wouldn't surprise me a bit. Study up on intervention price reaction. It's really crazy stuff. Again, go use the Fred website. It's the Federal Reserve of St. Louis, which is about 4 hours to my east, where they have a really cool way of mapping out, or basically just taking a look and seeing the historical movements from, where's Fred? Where are you at, Fred? There you are. The historical movements of yen. So Japanese intervention right here, Japanese bank purchases of dollar against yen or vice versa. And remember, you can go on to this little graph. And I know I showed you guys before, but now that we're actually getting a little bit of intervention, it's just a good idea to go onto this map. Take a look at where the yen was intervened with by the bank, and then go look at a daily chart on all these dates. July 11th, 2024. May 1st, 2024. Okay. April 29th, 2024. Go have a look. That'll be your homework assignment, and just get an idea of what happened every time they intervened. You'll see some gigantic moves. It's pretty crazy stuff. Like really crazy stuff. And if you guys figure out a way to to know when the Bank of Japan's about to do that, let us all know so we can all be multi-billionaires. We retire. Fair enough? What we got up here on the chat? Let's see here. You know what, Ray? Yeah, as far as stocks go, and I know we're not on a stock channel, I am keeping an eye on Meta. Okay, we had the 4 Mag 7 releases yesterday as far as earnings go. Tonight is April, or I should say today is Apple, rather. Sorry. But yeah, when Meta shook out, I was actually kind of interested. Very quickly, I'll show you this, and then we'll get back to currencies. Meta. Let's see. So on Meta, I'm keeping an eye on. I was keeping an eye on this zone of demand down here, and then obviously the daily a little deeper. But you can see we just had an ugly drop when the earnings came out yesterday. Ton of points, guys. 670 down to 600. So yeah, I'm actually keeping an eye on this 4-hour zone. Now, did we drop into the 2-hour? Because I was looking for the confluence. I was looking for the confluence on this thing. Get this out of the way. Okay, we didn't quite get there. So that top white line is a 2-hour demand zone confluence. The bottom line is a 1-hour. So rather than taking a limit order or a market order, just the bounce of the proximal line of the 4-hour, I was waiting for a couple more sets of eyeballs. And I think we got close. Oh, we did wick into it, ladies and gents. So this will be something I'll look at because we actually did drop into the 2-hour now that I see that. So as soon as my stream is over, I'm probably going to look at that and see if I can get a second chance entry to go along on this thing, because at the end of the day, Meta is bullish. I mean, it's bullish when we look at our stock box. Okay, Meta right here, +8. Guys, if you've never seen the stock box, Nick and company have the same discount. I did see that on the website earlier this morning. Go check it out, and this will help you out with some of the top stocks if you're interested in looking at the readings, sentiment, everything, macro, everything, guys. Stock scanners, dividends, all that stuff. But this was the basis right here for why I'm interested in, just like we used Edge Finder for. Okay, this is the reason why I want to take a look at this meta bounce, potential meta bounce. So again, I'll look at and evaluate that whenever my session is up with you guys. But that's currently the only one I'm interested in, other than the Netflix dilly-dallying and dicking around. Kiwi dollar, says Jeremy. Yeah, let's go have a look at that. Kiwi dollar. Kiwi dollar make you holla. Okay, let's go to a daily on the right. Looks like our 8's above our 21, so it's, if anything, it's a little bit on the bullish side. From a technical standpoint, I think this one's still neutral on us. It was, oh no, it's bearish again. Okay, -5. Just barely, guys. So remember, you must be this tall to ride this ride. It's just barely tall enough. So if it's just barely tall enough, I don't know that I want to be doing any kind of full porting, full risk, full percentage, but I do want to tip my toes in potentially, but I really can't. Now we have bounced off of a daily supply. So that might be the push to push us down to the next major demand, guys. Remember, all price does all day long is bounce from major supply to major demand and vice versa. The higher time frame stuff. There's a lot of stuff, obviously, that goes on in the meantime on the smaller time frames, but just in general. So daily, if you want to call this a major supply, let me turn my drawings off for just a second. Yeah, because I can't really use a weekly. On a weekly time frame, I can't utilize it for confluence because all these wicks are overlapping. There's no clear gap where this daily is. So then I go back to the daily. Okay. Again, the daily is where we have our gap. Gap is going to look like this. Under there to down here, there is our fair value gap showing where supply heavily exceeded demand. As you can see, we've pierced the gap. This is why we don't trade gaps, because they're not consistent. We look for the unfilled orders I look for the unfilled orders on the opposite side. So from a daily perspective, I like it. That's matching up. Even though my moving averages aren't quite clear, matching with me, okay, because the 8 is above the 21, which would technically mean uptrend. That's only a filter. Remember that. It's not a reason. That's not just the main thing for me is are we making lower lows, and or did we bounce into a major zone of supply? In this case, we hit the supply zone. Now, on the flip side, on the downside, let me just go to a full chart real quick so you guys can see this easier. On the flip side, now we've bounced into a zone of demand. We got a reaction. Okay, so this was an old mapping line I had. At this point, this this demand zone. Okay, this is where we caught a bid, and now we're getting a push back up. So could this demand zone give us the power to push us up to a supply zone? Now that we've broken these structures here, this turns into my impulse leg. And I know I got a lot of drawings up here, so let me try to move some stuff out of the way. Okay, so so now I'm looking at my impulse leg right here. This is my impulse leg or impulse collection of candles because we broke a structure to the downside. So where is my supply zone within that impulse leg? Well, if we're looking at it from a 4-hour perspective, do I have any gaps right here? I have a very tiny gap, and I can tell you right now on a 4-hour chart, I don't like it. This is a very, very tiny 4-hour gap from the bottom of this candle to the top of the candle after the leg out. That's not enough to get me excited. That's not enough to get me out of bed. What about a 2-hour? Step down until we find something we like. Okay, so this looks a little better on a 2-hour. How's the gap look on this? Looks pretty good, does it? Okay. We had a drop, a base drop. So, kind of a wide base, but base nevertheless. Very strong gap, runaway gap. And I'll just steal this one here. So this is what our acceleration gap is going to look like. That's pretty good. When you're talking relative to the size of the candles, that's a pretty strong gap. I like that. So we could very potentially right now be in a pretty decent supply zone to possibly short. But I would just be careful because, again, we just bounced into a higher time frame demand zone. So could that higher time frame demand, which is 4-hour, do you think that might be strong enough to push through a 2-hour? I don't know. In general, yes. Because if I'm looking for an overhead supply, well, I'd probably just resort back to the daily that we got the initial bounce from. And the one thing I would caution on this, if you're trying to short this, just remember we have, and I drew this up yesterday, we got this, 2-week long period of fair market value if you're looking at this price action on a higher time frame. All those wicks, all those candles basically being squeezed in about a 60 pip range on Kiwi dollar, which I think ranges around 60 to 70 pips a day as it is. So it's just been going sideways. So to me, that's a little bit of a fair market value zone. I don't usually like to buy and sell out of supply and demand zones that are created inside of a fair market value area. So that's right in the heart of where it's at, that supply zone. So the next higher probability, I feel like it's going to be higher up. So maybe something way up here, if it even gets there. Okay, it is a -5. So it's not like it's a very, very strongly bearish pair or very bearish pair. So perhaps it could give us a little more room to run up a zone up here in this top area. Okay, there you go. You got a gap right there I drew up sometime in the past. Talking about this candle where price dropped, multiple red candles, broke a structure. It could have been on better volume spread analysis. That's a little less attractive, I got to admit. But as far as just isolating zones, that one, you could maybe even look up here. Again, we're down to a 1-hour chart. So this is a little bit of a 1-hour zone. I would have preferred to have seen a second candle in there, to be honest with you. That is another potential zone. This is at the origin of the overall strong move down. So that's attractive. Okay, we're in the premium zone. We're in the expensive zone. So I'm not selling at a cheap spot. Be selling at a premium. This whole price action is one big impulse leg to the downside. Okay, drawing up my impulse leg. Oh, actually, well, that's the one I just drew up. So there you go. Yeah, that's the same one I drew up. So yeah, I would say that this is a minor risk. If I were to short this, I would only limp in. I would only want to limp in at this 2-hour zone. Okay, we'll just get rid of our gap since we know that's a thing. So this would be a partial risk short for me personally. This up here would be a little more of a regular risk. Okay, so that's just kind of a couple thoughts. Again, guys, do what you want. But I'll definitely be paying attention to this after I hang up with you guys for sure. All right, what else we got? Yeah, Euro pound is melting, Cycling Club. Absolutely. Okay. So yeah, Euro pound. Of course, that was the second most bearish asset yesterday. I think Swiss yen was, let's see here, Euro pound. Might have been the most bearish? Swiss yen, yeah. Swiss yen number one, euro pound, and then Kiwi yen the third. So yeah, let's look at that euro pound because I saw that right before I hopped on with you guys, just melting down like crazy. I already know my daily 8 is below my 21 EMA, so I know I'm good there. Lower lows, lower highs. We have to be aware that we are getting close to this down, this underneath demand zone, not too far away, about 10 pips away. Guys, euro pound only moves about 38, 39 pips a day on average. That's the average true range. We have a retail chop zone right through here, do we not? Is this one big fair market value area? Looks like it to me. So just be aware that this is where traders come to give their money away. Okay, I only care about the extreme zones, meaning a zone that's not in a fair market value area. This is about a 6-day, 6-7 day sideways chop between 680, 55. So about 25, 20, 50, 6, 7, 8. Yeah, about a 25 pip range, guys. This thing just hovered in a 25 pip range for the most part over 5-6 days. It's fair market value. That's everybody agreeing on price, right? I want to trade where they're disagreeing with price, where price is moving sharply away in a smaller period of time. So I have an alert right here at the 86, 84 level, it looks like. So I'm looking at this supply here. This might not be my favorite look. The higher probability is going to be up here, guys. 87, basically the 87 round number, psych number, 0.8706 to be exact. But just because it hits 87, there will be traders inevitably that short this. So just know that they're going to put their liquidity, which their stop loss is somewhere up in this area. And if they're shorting, what are these orders? These are buy orders. Okay, there's going to be buy orders at some point when those 87 traders, those 87 level traders start shorting. So they're buy orders up here, which is what needs to fuel sell orders, right? So sell orders from the liquidity, unfilled orders from the zone. I'm actually going to move this because that's going to be my favorite spot up here. Take advantage of that liquidity and unfilled orders. Buy to cover, guys, or at least take off half, sell half, let the rest run. Buy to cover, though, before you get to the major underneath demand zone. We don't want price bouncing in and then you lose all your unrealized gains, right? So just be aware of those zones. Again, doesn't matter what type of trading strategy you have. Always be aware of these zones, not just support and resistance, but the zones themselves where the underlying liquidity, lies. Take away your gains. So we don't want that. Hope that helps. I do have a few minutes left. Yeah, I was laughing at what Marco said about Lagarde coming out in her scarves. That woman has been on TV more than anybody of late. It's like a whole lot of nothing burgers. And basically, they're all just, I've noticed all these central bankers just kind of repeat themselves. Uncertainty, inflation, employment. They're basically all repeating the same thing. I haven't really seen anything too different. So, yeah, that was just a thought I had on that. Let's see. Warsh, guys, I think we might have mentioned it, or I'm sure at least one of us have. Kevin Warsh did pass the House yesterday, and he's just got to pass the Senate as far as getting to President Trump's Oval Office to get signed in as the new Fed chair speaker. So I haven't seen anything new on that since yesterday. That is in the books. I can't wait till his first presser. It's going to be interesting. God rest Powell's soul. Okay, let's all give a moment of silence. Start prepping for the next guy. Let me have a look up here. And then, yeah, just finish off with a couple of these alerts. Let's see. I have had a couple of alerts. I've just been so busy this morning. I haven't even had a look. Okay, this was a pound Swiss. That was a very skinny demand. I wasn't really expecting that one to hold too much, but, depending on the stop loss, it looks like this actually would still have somebody in a trade. So let's see here. We'll just call a buy order here. Sell before you get to this overhead supply. So that's 50. We'll call it 50 pips. 50 divided by 2 is 25 pips. Okay, so we'd still be in that trade. So that was one I was keeping an eye on. I don't want to choke my trade out. Okay, I used to be really bad about this, guys. Whenever I would buy on a zone or sell on a supply, whatever, I would always put my stop loss just a few pips below, just like that. I used to be the statistic. I used to always get closed out of my trade, and then price goes exactly where I thought it was going to go to begin with. So that has single-handedly been one of the biggest lessons for me personally over the last, I would say, year and a half. and has really greatly improved everything, is just simply taking what the market gives. I know that's cliche, but not trying to be so exact with our stop losses that we get this happen to us. Oh, there goes my trade. I knew it was going to go there, but why did I still lose money, right? So yeah, with my new mindset I've had of late, I'd still be in this trade, but I was too busy. I missed it. That was pound Swiss. I know that was giving us bullish signal, and that is my time, ladies and gents. My goodness. Sometimes we need an hour apiece, I swear. Ladies and gents, about the last thing I have before we get up out of here, Friday. Yeah, we don't really have a whole lot going on. So I love days like Fridays when we don't have a whole lot of major red folder events. Just pure supply and demand. And then whatever geopolitics we get, if any, out of the Middle East. So that's really going to be the look there. I'm going to look for that meta play as soon as I hang up with you guys. We'll see if I'm in that tomorrow. With that, take care. Have a great day. Trade safe. We'll see you tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.